became stuck within this whole program. They're trying to get the money back out. So there is thousands of entities involved with this. I think Gemini Iron was one of the largest retail products out there. And at the same time, there was that lawsuit with the SEC, I think back in January or February, with the SEC saying that the program that Gemini and Genesis were running together looked like security. I don't know where that one ended up. I haven't seen any updates recently, but it just goes to the point, like a lot of these products, there's a lot of people involved, and there's a lot of there's no clarity on the situation at all, even on the legal side. Danny?
Yeah, to me, it seems like the base of these allegations stem from the risk management department, right? Because let me think. It's Gemini, right? Yeah, I get the G's mixed up. But Gemini is saying that Genesis induced customers to put money in by having, or purported to have, a very robust risk management department that really didn't follow through because it didn't catch 3C. Now, in crypto, it's sort of become a meme, right? When these companies blow up, people buy the T-shirt that says, insert company name here, risk management department, FTX risk management, Genesis risk management, because we always joke these risk management departments just aren't up to snuff. So what I'm excited for in this suit, if it moves forward, is the discovery process, because then we might get a chance to better understand how Genesis's risk management department actually operated, because that would be at the key of these fraud allegations. If it was fraudulent in presenting itself as robust and doing its job, or really if it just didn't have the controls that it should have. So that is the big tell that I'm looking toward in this case, even though that's probably months, maybe even years down the line.
Yeah, DCG tweeted just as we started the show that the Gemini lawsuit is a publicity stunt. It says that it is blameless and defamatory. It's quite a long tweet, so you can go and read it. I think that this kind of comes back to the fact that it's all being broadcast on Twitter. I think reading like this is a publicity stunt, it's easy to draw that parallel. But at the same time, Danny, I agree with you. I look forward to seeing the discovery and seeing some of the evidence behind the claims that are being made here. Will, last thoughts?
It's going to drag on for a while. If you are sitting in Gemini Earn account, I guess you are on the side of the Winklevoss twins, but maybe not. I think the whole industry is sort of watching this one and hoping that there's a peaceful resolution. So we shall see. Jen, I'll throw it to you for the next story.
Okay, so some different drama than we're used to talking about here, kind of. Kraken co-founder Jesse Powell is under federal investigation on claims of hacking and cyber stalking a nonprofit that he founded. FBI agents searched his LA home, probing whether he interfered with computer accounts of Verge Center for the Arts. A lawyer for Powell said he's done, quote, nothing wrong. So this has nothing to do with Kraken. This is all about Powell, but interesting if you're a conspiracy theorist. Danny, I'll toss it off to you. What do you make of this story?
Throw it off the conspiracy theorist. All right, that's fine. I'll take it. It is and it isn't related to crypto, right? Like the dispute here stems from this arts organization that Powell founded in 2007. And he was on its board of directors for a long time since, and he left that board, or he was pushed out of it, I believe, a year ago, because he apparently stopped showing up to meetings, and his political views did not align with the guiding principles of the group. And so they said, get out of here. And when he did get out of there, when they kicked him out, he allegedly made life very difficult for their IT department by shutting down the email accounts and stuff like that, and just really making things difficult. And right in that story that I just outlined, you actually get back to the crypto angle, because those guiding principles that Powell differed with the arts organization on, that whole kerfuffle came right after he pushed Kraken staff to either stay in line or leave if their political views diverged from Kraken. So, Will, I'll toss it over to you. Do you remember that case?
Yeah, that was an interesting story. That sort of happened around the same time that Coinbase was interacting in similar principles, right? Where they said, don't bring politics into the office. We don't want to deal with that. We have a purpose here. That purpose is monetary freedom through cryptocurrency. So let's focus on that. Sort of what Kraken did as well. Kraken, of course, and Jesse Powell have been far more outspoken on that front and has like a long history of like a lot of different things have been spoken about in traditional media with a lot of backlash. that being said, as it ties to this story, it's sort of interesting to look at like the traditional way that some of these organizations can run, the fact that you can be kicked out, and then working within the crypto space where you can make pronouncements like that. And for the most part, like you find it's very hard to be canceled within crypto for whatever reason. A lot of times, even the scammers seem to find their way back into crypto. And by no means calling Jesse Powell or Kraken or anyone there in that sense, but it's funny how there's like a very large cultural divergence from the traditional world and crypto. And I think that's one thing that does make crypto like a little bit more robust to different cycles. To the story itself, one thing I wanted to point out is like there was an FBI raid involved with this. Like seemingly a lot of people are taking this very seriously, though Jesse Powell in a tweet referring to the story responded to an account called Autism Capital stating that he was not really on Twitter for the moment and wasn't like super concerned about this because he was playing like Diablo 4, a video game or something like that. So, we got a lot of different characters involved in the story and they're taking it in like different strides, to say the least. But this is a good drama story. I do like it. Jen?
It's a good drama one. I feel like in this industry, we get these like damning stories that involve a lot of players and different government agencies. And then you'll have like the main person of that story come out on Twitter and be like, I don't care, I'm chilling on a beach, or I'm playing a game. It's just a crazy industry we work in. I wonder if we see, computers get seized in this investigation for the cyber stalking and hacking, and maybe some of the evidence, like I'll take the conspiracy theory route here. Maybe some of the evidence they discover leads to some kind of lawsuit or investigation into his crypto dealings, and that could be interesting, and I wouldn't be surprised at all. But again, I don't have any information or facts to back that up. That's just from my own head. Before we go to the break, I need to correct myself from our first segment. Apparently, I said blameless. That was just a blunder of my mouth on a Friday. Can't always get the words out correctly. DCG called Gemini's lawsuit a publicity stunt and said it's baseless and defamatory. So there we go. Fact checking myself. Danny, Will, have any last thoughts on the story?
I just appreciate the fact check. Quality
Good
journalism.
fact check.
Absolutely.
Yeah, we always got to correct ourselves. All right, we will leave that there. We're going to take a break. When we come back from the break, we'll be talking about Threads Day 2. It's still a thing, and apparently it's garnering a lot of users. Stick around and find out what's going on.
Welcome back to The Hash. We are back talking about one of my favorite topics, which is bridges that don't work so well. Multi-chain, that bridge company that about a month ago had to come clean with the uncomfortable confirmation that its CEO is nowhere to be seen, apparently is losing a lot of money, and no one's really quite sure why. Yesterday, 3 different bridging contracts, one for Phantom, one for Moonriver, and one for Dogechain, started losing in total over $120 million of various cryptocurrencies in what looks like an exploit, but no one's really quite sure. The multi-chain company, the multi-chain Twitter account, came forward yesterday and said, yeah, we're not sure what's happening with this money. It's leaving our access, and we don't know why. Stay tuned. And by the way, maybe don't use multi-chain bridges for the time being. So all this to me just speaks to a company that really has no idea what is going on, and is very concerning because bridges, as we all have learned, are very important to the crypto ecosystem in moving tokens from one chain to another. You have to trust in the bridge to feel certain that your tokens will have value. And if the bridges aren't able to keep the tokens in check, let alone a handle on their own understanding of the situation, like, what are we to do when the second biggest bridging company is having issues like this? Jen, I'll start with you. What do you think of all this?
What are we to do? What I haven't heard greater words when talking about bridges, Danny. So we hear so many attacks, hacks, vulnerabilities when we talk about bridges. So when I saw the headline, I was like, oh, okay, another bridge exploit. But then when we get into the story, there are so many little tidbits that make this one extra interesting to me. So you mentioned the CEO went AWOL. No one knows what happened to the CEO. And there's some speculation that the executive team was arrested in China. Then you had, like, last month, there were a bunch of technical issues and the team kind of was really quiet, not saying much about what was going on. And now we have this hack and they're out there saying, actually stop using the product. We still don't know what's going on. It just is all seeming very strange and I don't know what to make of it. But I think it just highlights the fact that we're still so, I'm going to say it, still so early. We're still so early. And there are so many things to figure out in individual ecosystems. And when you add this extra capability to connect those ecosystems together to make things more interoperable, of course, there are going to be vulnerabilities like this. Maybe not this specific situation, but yeah, I think that's what it highlights for me. Will, what do you think? Do you have more sense to make of the story?
I like to think so, but possibly not. We'll find out in a second. You guys give me a rating. To Danny's question, what are we to do if bridges don't work? Well, I don't know, Danny. Like, sort of the purpose of crypto is like scamming people, right? And bridges incentivize that in a really good way. So, like, we can just continue to roll out these bridges that don't work, and everyone can get scammed that way. I would love to see some charts of, like, the amount of crypto stolen from wallets, from hot wallets, from exchanges, and then against bridges, because I think bridges would be up there in the top. It'd probably be one of the highest amount of scams, because at the end of the day, these are just multi-sigs, more or less, and it just means that a few developers or possibly a few smart contracts are running these things, and people can break into them. Bridges are not what a lot of people think they are. They're not this trustless two-way peg where assets can flow back and forth. They are very much so escrowed accounts that have the ability to lock in funds and then release funds on the other side. But those funds are not the same. They're not necessarily always fungible. Take WBTC, for example, Wrap Bitcoin. Basically, how Wrap Bitcoin works is you give Bitcoin to BitGo, and then they issue WBTC, which is an Ethereum token version of it. And that's sort of a bridge. It's not as complex as the other ones, but it does allow you to bridge from the Bitcoin ecosystem to the Ethereum ecosystem using a centralized entity in between. And if that centralized entity is ever caught in some sort of issue, whether that be legal, political, or even on the developer front with illegal activity, well, you're going to have a bad time. Now, one thing to this, I think, is possibly a good note, is most of the tokens here that have been stolen or missing are actually funds that could likely be frozen. And that would include a lot of USDC and WBTC. So if the teams or the DAOs behind this do contact those entities, they might be able to freeze funds. They might also just be able to put those funds on a blacklist and have new funds issued. Because at the end of the day, as a bridging token, the real assets do reside somewhere else, and you might be able to get out of this in a better fashion than it looks like on paper as of now. But it's not looking good. Danny?
No, it is not looking good. And I will say, anytime you have a bridge, you almost certainly have a centralized entity behind it. And that's one point of failure. The other point of failure is the bridge might break, or someone might steal from it, take the assets. So those are two really important things to keep in mind when using a bridge. And also, to me, it stands to reason that there's actually a better way of doing this, doing bridges. Like if you're going to accept that a centralized entity has to somewhere mix when moving assets between chains, USDC and Circle have actually put forward a pretty good solution. So any ecosystem that has native USDC, Circle is progressively rolling out this new type of bridge that will, when you put the USDC in on one side, it will destroy that USDC and then reissue new USDC on the other side. So that takes away entirely any risk of these funds being locked up in an escrow where they may be susceptible to a hack or a theft, because they're just going away and then being recreated somewhere else. Now, this is only possible because Circle is a centralized entity, and this is a centralized stablecoin that is under its purview, but it is a much safer bridging solution when you think about all these $100 million hacks that we see over and over and over again in crypto.
I think so as well.
Maybe we'll have the centralized bridging solutions for all the risk-averse people and the decentralized solutions for the riskier ones.
Well, that's the funny thing, right? The decentralized option is the one that is inherently centralized. There's not really any sort of sidechain solution out there that functionally works, besides maybe some of these rollups that are being built on. And even those, once you get to the L2, you have like a sequencer problem where that's also a centralized entity. So a lot of work to be done. Jen, I know we made fun of you for saying it's early days, but it is early days when it comes to L2s and bridging.
I know, you guys always make fun of me, but I'm not always saying things that are totally out there.
It's just a little cringy. It's just a little cringy.
Sometimes.
That's all.
Yeah, got to bring the cringe to the show.
It's true.
Okay.
It's true.
All right, let's move on. Threads. Did either of you sign up for a Threads account first before we get into the story? You did. Danny?
I have not. Nope.
I have not also. Well, Will, you'll have to give us the intel on how it's going. Threads hit 30 million users a day after launch, while Twitter threatens legal action against Meta for hiring ex-Twitter employees with knowledge of the company's trade secrets. Threads has been able to compete with Twitter. Some are saying like no other platform has before because of the Instagram integration that allows you to follow all of the same people that you follow on Instagram. Will, since you signed up for Threads, what has your experience been like? Are you going to say goodbye to Twitter?
Yeah, I don't know. We talked about this yesterday. I didn't have an Instagram account for years, and then I just rebooted back up because of Threads, and then immediately was hit with a bunch of high school friends I did not want to see on a Twitter clone. That just felt very awkward to navigate around. And before I knew it, there was just a bunch of brand ads everywhere, a lot of cringy material, a lot of weird tweets. They're kind of putting this out there as Twitter, but safe for everyone. I think they're going to do a lot of work on sort of the censorship front and take down things that they don't like. And so maybe it's more friendly for brands, and I guess for people who don't want to deal with the trash bucket that is Twitter often. But at the same time, I don't think the content was as good. Now, towards the Twitter versus Meta take, the interesting discussion here on the crypto angle is that there's been a lot of people who've been trying to build things outside of Twitter. If you look through Bitcoin's history, there's sort of been progression of moving away from different social platforms. So in the early days, you had the Bitcoin talk forums, and then there's this movement to Reddit, and then now it's on Twitter, right? And so a lot of these people have been we don't like Twitter as much these days. Elon's been testing a prod. It hasn't been as great. What if we could go to Nostr or Mastodon or Blue Sky? A lot of these applications just haven't taken off that well. I think Nostr's maybe had the most successful launch to date, but even that, if you look at it, it's pretty small, very small. The thing with Threads is it did grow very fast, right? They had 30 million users within one day because people were just able to port over their Instagram accounts almost immediately. The question here is can it stick? Twitter's been very sticky. It's one of the smaller giant social platforms out there with a little over 300 million users, I believe. That's comparative Facebook's billions of users. I just don't know if it's going to stick, though, because Twitter is and remains a dominant platform for connecting people who have interesting ideas and takes in forms of microblogging. Danny?
Yeah, I think Elon's just being very insecure here, right? He's already burned $44 billion and pissed off a lot of people and a lot of brands. And now Instagram, Facebook, Meta is coming through with what really is a Twitter clone, right? Threads looks like Twitter, feels like Twitter from the limited amounts I've interacted with it. It's the latest Twitter clone, Blue Sky being the other one, but it's definitely the most it's definitely poses the biggest challenge to Twitter's dominance. Whether that will become sticky remains to be seen. I don't necessarily think it will. I think that everyone on Twitter really actually loves to hate the trash bucket and can't do without it. So no one's going to be writing off Twitter just yet. What stands out to me for Threads and what it brings to the table that Twitter doesn't have is its use of this protocol called ActivityPub, which will allow it to, in theory, be more network. That's not to say decentralized in the crypto way where people are running validators and actually control the software and the hardware behind it. But with Threads use of this protocol, you could conceivably move your social followings from Threads to Mastodon or to one of these other protocols, one of these other services that also use it. So it, in theory, frees up people to have a more versatile and more fluid social experience. So that's promising to me. It's something that you just don't see at all on Twitter. I think that Elon here is just very insecure about the position that he has, in which he's really just pissing off a lot of people.
Yeah, I agree with you, Danny. I think Elon is pissing off a lot of people. They're trying to make business changes, but the changes they're making are affecting the end user, which I don't know if they're meaning for that to happen, or I don't know if they're thinking forward enough. A recent example of that was the limits on the amount of tweets you could view to try and address data scraping by brands, publishing companies for that kind of sentiment data. But who did it end up affecting? It ended up affecting users, making them upset, driving them to try out any number of these Twitter alternatives that have popped up in the last days. I wonder if this is going to be an opportunity for Elon to really kind of shift the business model of Twitter. You know, I think yesterday there was that story that came out and said he wants to change Twitter into like a WeChat of the West, where it's the app that you do everything in. That's really different than how Twitter looks today. So maybe there's a future where there's a version of Twitter that looks like the Twitter we use today, and then there's a version of Twitter that is completely different. And Elon's giga brain has a vision that we just cannot comprehend right now. Will, you got any last thoughts on this one?
Yeah, I mean, Elon is going to test and prod, and I think he's held to that, right? There's been a lot of changes to Twitter, and they've moved forward with some, they've moved back with others. And I think that Twitter in a year is going to look a lot different than it is right now. So I'm not overly worried. I don't like the experience right now, but that's just one crypto Twitter person's opinion. So I don't know. Danny?
Yeah, I'm sticking with Twitter for now, I have to say. As much as I hate it, I really do love to hate it. So I can't cut it off.
It's kind of part of it, right? It's part of the whole experience.
Yeah, for sure.
Yeah. All right, we're going to leave it there. Maybe we'll try Threads and Blue Sky and something else this weekend. Thank you for joining us on The Hash. Thank you to Danny Nelson and Will Foxley. I'm Jen Sanasi. We hope you have a great weekend, and we'll see you on Monday.
Welcome to Forecast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. It's where we look beyond just the headlines to get you the insights and knowledge that will help power smarter decisions. Welcome to the show. I'm Forecast's editor-in-chief, Angie Lau. It's always great to be here with you. Let's get started. All right, Asia was front and center on crypto rules and policies this week, and perhaps a flex post the FTX disaster. It's all about investor protection. Starting with Singapore, still stinging perhaps after its sovereign wealth investment vehicle Temasek lost more than $250 million of taxpayer dollars in its FTX investment. Well, on Monday, the city-state central bank said crypto service providers will have to segregate customer assets from their own and hold them in trust. In a statement, the Monetary Authority of Singapore, or MAS, said doing so will reduce the risk of loss or misuse of customer assets. The MAS added that it will also help in the recovery of customer funds in the case of a crypto service provider becoming insolvent. Yeah. Sounds familiar, right? FTX. Crypto firms have until the end of the year, it says, to put all of these measures into place. Now, the Lion City Central Bank will also restrict crypto firms from facilitating lending or staking of their retail customers' crypto. Remember, staking involves locking in one's crypto assets for a specific period to earn rewards. Well, that's no more in Singapore. The MAS also indicated that it's still assessing the issue, however. Pei-Ying Chua of law firm Linklaters told Forecast that robust investor protection is clearly non-negotiable to the Monetary Authority of Singapore, and this can help restore stability and trust for the crypto industry for the nation. She added that while the MAS policy stance is clear and unlikely to change soon, they are willing to monitor development and may revisit their position if appropriate in due course. Of course, navigating the space in the regulatory realm is definitely something they want to keep an eye on, especially on Hong Kong. Meanwhile, Singapore's neighbor, Thailand, is also bearing down on crypto staking. The country's Securities and Exchange Commission has banned crypto exchanges in the country from offering both lending and staking services. It said that this move is going to protect investors from the risks of cryptocurrencies. The Thai SEC also requires crypto exchanges and brokers to share a mandatory warning about crypto risks, which must clearly be visible to customers. Kind of like that, smoking is bad for you label. The new rules will come into effect starting July 31st. But wait, there's more. Over in South Korea, legislators are also making regulatory moves towards crypto investor protection. The country's National Assembly approved a bill which in English translates as the Virtual Asset User Protection Act. Now, the bill is being seen as the first step to building a legal framework within the country devoted to digital assets. This is the same country that got decimated by the Terra Luna crash. It requires crypto service providers to ring-fence users' assets and deposits, to have insurance, and to hold a portion of reserves in offline cold wallets. Now, in case of hacks or system failures, among other provisions, they've got this all under the legislation. The legislation also gives the Bank of Korea the right to request data from cryptocurrency platforms, a right that it had been arguing for with the country's financial regulators. The legislation is expected to come into law in a year's time and has received a thumbs up from industry players.
이번 법 통과를 계기로 상당한 수준의 규제, 제도의 불확실성을 걷어내므로 인해 가지고 사업자들이 예측 가능한 회사 운영을 할 수 있는 점 등이 있어서 가상자산 거래소를 비롯한 사업자들은 대체적으로 법 통과를 환영하고 있습니다.
Meanwhile, in other parts of the world, read the US of A, trying to figure out the mess triggered by the crypto meltdown. We're talking about Cameron Winklevoss here, co-founder of crypto exchange Gemini, one of the twins, tweeted a final offer worth $1.5 billion in debt restructuring talks with bankrupt digital assets firm Genesis Trading. In an open letter to Barry Silbert, founder of digital currency group DCG, which owns Genesis, Winklevoss gave them until July 6th, 4 p.m. Eastern Time to decide on the offer. Now, Genesis and Gemini have been negotiating for months to settle claims of Gemini earned customers, which lent funds to Silbert's firm. Winklevoss also invited Silbert to a Twitter space to discuss his offer without lawyers or advisors. Read really expensive, both of which have cost Winklevoss over $100 million in fees since the dispute emerged. A virtual handshake deal without lawyer fees in the works? Let's see. All right, time for a quick break before we talk about Hong Kong's new Web3 task force when we come back. Stay with us.
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forecast is the most reliable source of intellectual discourse and insight. It informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forecast has it covered. This is Forecast News.
Welcome back to Forecast IQ. I'm your host, Angie Lau, Editor-in-Chief, Forecast. All right, Hong Kong, it's marching to the beat of its own drum, marching ahead with its Web3 dreams. China's Special Administrative Region formed a task force here comprising of 15 industry participants and 11 key government officials to oversee the development of Web3 in the city. In a statement, Financial Secretary and Chairman of the task force, Paul Chan, said, Hong Kong seeks to lead and drive innovative exploration and development, create more application models, and strives to draw together top-notch companies and talent in the arena to build a thriving ecosystem. Now, we got to speak to one of the members of the task force, Yatsu of Animoca Brands, came on Forecast telling us that the development will continue the growth of Web3 industry in the city.
This is perhaps, exciting not only because it's a government initiative, but it just sort of demonstrates how Hong Kong is very serious about pushing the Web3 agenda. Actually, I also think it sort of shows the rest of the world how you can sort of integrate that type of cross, government/business collaboration.
So what exactly is Web3? Well, let's dive into it. It's an all-encompassing term, as we know. Some call it the next iteration of the internet, technology that will turn the world as we know it on its head. Well, tech investor and best-selling author Alex Tapscott joins us to talk about how Web3 is impacting business, culture, and society while helping people break geographical and economic barriers. He's launching his new book, Web3, Charting the Internet's Next Economic and Cultural Frontier. It's being published by HarperCollins now, and I'm excited to preview it here with Alex for all of you on the show right now. All right, different technologies are converging to shape our world. We've got artificial intelligence. It's accelerating faster than we can imagine. But what makes blockchain stand out amidst different technologies here?
This is a very exciting time in human history. We're at this moment where technology is reimagining everything that we thought possible. The rise of generative AI is changing how we think about human intelligence. But there's one technology in particular that it might surprise you to learn, I think is going to have a bigger impact than any others. And that is the technology behind cryptocurrencies, and it's called the blockchain.
Alex, in your book, you say Web3 success does not depend on converting everything that's on Web2 to Web3. So why is that?
I don't think Web3 is replacing Web2. I think it's additive to Web2, in the same way that Web2 is additive to Web1. But I think that there will be new kinds of applications that, if not displace, then disrupt or weaken the position of a lot of Web2 companies. The Web3 social media project of the future could be a token-gated community where with special user benefits, where there's maybe a native token that community members earn by participating in the social graph and doing fun things. And
what bright spots are you seeing in Web3 development?
One of the most fascinating areas of Web3 development today is in gaming. And having a digital bearer asset, something you can actually own and custody yourself and control how it gets used and where you send it and how you monetize it, that's a really powerful force. And so we're seeing that being introduced in the gameplay. To me, what I love about that is that it's almost like a stepping stone, because you're dealing with internet users who already have experience spending money on assets.
Okay, I want to talk about institutional interest in digital assets. Since BlackRock filed for a spot Bitcoin ETF, we're seeing more institutions eyeing up crypto. And you've seen that really increasing over the past couple of months, but the past couple of years for sure. What impact do you expect on the biggest digital currencies as a result? We're talking about Bitcoin and ETH.
What's more interesting to me than will BlackRock launch an ETF? Look at all the big Fortune 100 companies and other large organizations that are using Web3 technology and integrating tokens into their business processes. So, whether it's LVMH or Nike, or whether it's Sega, or whether it's PepsiCo or Starbucks, or any of these other firms, all of these companies are embracing Web3 in a really material way. And I think that more than anything else is what's going to drive long-term growth. Because ultimately, if a big enterprise is using is offering some program for, let's say, NFTs in Nike's case, or in Starbucks' case, it's a loyalty program. Well, those are going to have to run on some public network. And whether it's Polygon or Ethereum, it means there's going to be demand for block space and demand for network capacity.
Alex, thanks so much for joining in today. It's great to see you, and all the best for your new book, Web3, Charting the Internet's New Economic and Cultural Frontier. It's out September 19th. All right, I'm on the list. Okay, on that note, let's take a quick break, and we're going to talk about tokens, digital fashion, and what the NFT markets were up to this week on the other side. Stay with us.
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forecast has it covered. This is Forecast News.
Welcome back to Forecast IQ. Are you ready to take a fashion foot forward here? We're going luxe in the metaverse. Prada's time capsule NFT drop, or Gucci's cute Super Gucci's, or even a Vivienne Tam fashion show that brings Hong Kong in the metaverse to the New York Fashion Week. It's all possible in Web3. Forecast Maha Shah takes a deeper look into all the possibilities the digital world presents for fashion.
Web3 is in vogue. From broader NFT drops to Dolce & Gabbana fashion shows in the metaverse, a growing number of fashion brands are embracing blockchain technology. No longer constrained by traditional runways, fabrics, or geographical boundaries, digital fashion is transforming how we experience style.
It's an extremely democratic and creative environment where users can, as I said, take on Gucci and Prada and put that up with an up-and-coming designer coming from New York or London, put sneakers with it, and really go to town in terms of their manifestation and creation.
Luxury brands such as Prada are leading the charge with NFTs, targeting their tech-savvy clientele. Gucci also partnered with board app creator Yoga Labs for a metaverse project.
Luxury brands normally behind the curve. They jumped on top of the NFT piece because they're very excited again about the monetization around that. And why it was fantastic is it really got the luxury and brand owners up the learning curve in terms of digital, and they start to understand what digital rights and digital ownership means. Where it is challenging is it's slightly ahead of the consumer curve.
According to a report, the global market for digital fashion is expected to grow to $4.8 billion by 2031. COVID-19 pandemic sped up the shift to online shopping, which is expected to reach $8.1 trillion by 2026.
So when we're talking about the metaverse, and then we're walking around this metaverse with our avatar that we look at as our digital identity, of course, we'll be spending big bucks on rare clothing and clothing from these brands we all care about. There's millions of people who care about these luxury brands like Prada and Gucci, and in my opinion, there should be no debate. Their luxury assets will be coveted. Let's also mention the importance of something like Apple's Vision Pro that will lead us to a future where we're wearing some of these digital clothes on ourselves through mixed reality.
Artificial intelligence, or AI, is also helping streamline fashion's content and production cycle.
Our content supply chain is our king, it's our fuel. So the content that comes through the fashion, the accessories, the makeup, the hairstyles, all of that is really what players love to create with, and also what we monetize on.
Gaming is also emerging as a catalyst to introduce people and communities to the world of digital fashion. Sports footwear giant Nike recently partnered with Fortnite to launch Euphoria, cosmetic in-game item that players can use to customize their avatar.
Big brands feel right at home in video games, and it lets them stay connected to their customers even when they're not outside flexing their fit. We've seen Gucci, Vans, Nike, Ralph Lauren, all with a footprint in that ecosystem. Maybe not all as wearables yet, but it feels like that's coming.
As technology continues to revolutionize the fashion industry, new revenue streams emerge via smart contracts that allow designers to establish royalty splits and ensure continuous compensation for their work. Traditional fashion industry has had a significant carbon footprint, but could blockchain be the answer to make this industry more sustainable? The Aura Blockchain Consortium, backed by top brands like Prada, Cartier, Louis Vuitton, is certainly trying. They're using digital product passports backed by blockchain technology to track the life cycle of their merchandise. There are, however, some challenges to mass adoption of digital fashion. The road to Web3 as it exists right now is paved with digital wallets, NFT mints, and seed phrases. It's technology that's not intuitive, and brands that want to be successful in digital fashion will need to invest in engaging and accessible user experiences. Digital fashion can also raise legal and ethical concerns about NFTs, ownership, and copyrights. A New York judge banned artist Mason Rothschild earlier this year. Rothschild was selling Meta Birkin NFTs, which was ruled as an infringement of the trademark rights of Hermes' iconic Birkin bags. But there are those who believe in the potential of the industry.
As an entity, we are a fairly prolific investor in the Web3 space. We have done investments in BNB, Altava, Superplastic, another, UNXT, and a whole bunch of other companies that basically all provide sort of avenues in which you can do virtual fashion in the metaverse.
Fashion is constantly evolving and shaping culture, and as brands continue to experiment with cutting-edge technology, we will see new avenues for creative expression. Maha Shah, Forecast News.
All right, let's step away from fashion right now. There were a lot of project-specific developments in the world of NFTs this week. Forecast Labs data analyst Yehuda Pesher is here with all the details. Good to see you, Yehuda. What's the download from NFT land?
Yeah, great to see you again. Well, it has been a very, very rough week for NFTs. After seeming to find a break in those free-falling prices, well, a poorly executed mint from one of NFT's most popular projects called Azuki, it sent the markets into a bit of a free fall again. Let's take a look at the Forecast 500 NFT index, and as you can see, the Azuki Elementals mint on June 27th, well, it led to a major sell-off across the NFT market, though you can see it has tried to bounce back from these recent all-time lows. So I want to set the stage for you for what happened with this mint. Azuki Elementals is the Azuki team's second new collection since January 2022 when they launched their debut NFT collection. That collection at its high point last year, by the way, reached 32 ETH, which at the time is $110,000. Since then, that collection has remained one of the most expensive NFTs across any blockchain, and they've performed really well in this bear market. Well, when you have a hyped mint like this Azuki collection, it's usually followed by a very active secondary market. And when that happens, when you have that active secondary market, that puts liquidity into traders' hands who then typically go shopping. That did not materialize this time. Instead, with the Azuki Elementals mint, it was really only the Azuki team that gained that liquidity, and they actually made $37 million from this mint. So the first problem here was the Azuki Elemental collection was sold almost entirely to existing Azuki holders. They left out, for the most part, their secondary collection called Beans, and the public was entirely shut out of this mint. And then came the art reveal, and this is what really caused the panic in the market. When the art was revealed, collectors were met with artwork that looked nearly identical to the existing, that first Azuki collection, and it felt like it essentially devalued that first collection. And given that the market as a whole was already down pretty significantly, and that these Azuki NFTs did hold some value, 10 ETH plus, well, they began to sell them while they still had value. That Azuki floor price started tumbling. It is down 67% in the past 30 days. 58% of that is coming just in the past week here. And that same sell-off, it extended to their other collections. I'm talking about the Beans NFTs, which are down 76% in 30 days. 69% of that is in the past 7 days. The new Azuki Elementals collection that minted for 2 ETH, that's currently trading for around 0.8 ETH. It's down around 75% from its mint price. Have a look over at Yuga Labs NFTs, which are struggling as well. Even with the launch of their new video game called The Forge, Yuga Labs collections, which includes Bored Ape and Mutant Apes and other deeds, they're all down significantly too. Bored Apes in particular, and I mention them because they are the most significant NFT out there. They're world famous, right? But those are down 38% in the past 30 days. 23% of that is just in the past 7. And then if we hop over to Solana, a project called Solana Monkey Business, and a head-turning raffle with NFT tickets where buyers would be refunded if they didn't win. The tally at the end of the raffle, it showed that over 50,000 NFT tickets were sold, and that's prior to refunds being given out, by the way. But the SMB barrel raffle collected over $29 million. It's a huge number. And again, I just want to point out the huge asterisk here is there's only 4,000 winners of this raffle. So a majority of that money is being refunded. But again, I'm pointing it out because there is something significant here. First, it's just an incredibly fair way to do whitelists or do reservations. But for me, the real takeaway here is that, like Azuki's Elemental Mint being the highest single day of sales over on Ethereum, well, Solana Monkey Business's barrel raffle tickets, that was the highest day of sales on Solana this year. And we'll also zoom out there too. Like Elementals, it was the highest day of sales since May 2022. What this tells me is that there are many NFT investors who are here, they are active, and they are watching for opportunities. There's also another major project, a top 50 project called CyberKongs, who have a major mint coming this month as well. All of these things combined will tell us a lot about the current state of the NFT market. So I'll see you next week with that.
All right, thanks, Ehud. Always good to have you. All right, everyone, let's turn our sights now on a blockchain that is getting a lot of attention for, well, not getting a lot of attention. Among the most popular blockchains for NFTs, there's one that's being dubbed a ghost chain. We're talking about Cardano here. But supporters of the chain disagree. So what's keeping the Cardano NFT ecosystem afloat? Forecast Sultan Bardai finds out.
There were 13,500 unique NFT buyers during the month of June on the Cardano blockchain, which was more than 10% lower than those in May. That's a giant drop compared to the peak of over 250,000 buyers on the chain in October 2021, according to data by CryptoSlam, an arm of Forecast Labs. The Forecast Cardano NFT Composite, which measures the investment performance of NFT traders in some of the top collections on Cardano, showed a drop of almost 4% through the month of June. But Forecast Labs data suggests that traders on the so-called ghost chain suffered significantly fewer losses than those on some of the world's top NFT networks, such as Ethereum, Solana, and Polygon. Cardano's native cryptocurrency, ADA, is the world's 8th largest cryptocurrency by market capitalization, with around $10 billion worth in circulation. Despite it being the 6th largest blockchain for NFTs by all-time trading volume, with almost $600 million in sales, the network's NFT ecosystem has, in numerous occasions, been declared dead by social media users. But Musa Zaidi of NFT Hive Club told Forecast he wouldn't dismiss Cardano from the top NFT blockchains. He said, "There are still some die-hard Cardano supporters and projects out there that back the chain, and as past crypto portfolios show, a single market bull run can be a game changer." Despite the falling number of buyers, new NFT collections continue to launch on Cardano. Last month, Australia-based digital artist Joe Moore, better known as Moga, released the MogaKongs NFT collection on the chain, a collection of 5,555 girly NFTs that sold out within 48 hours of launch. According to Moore, choosing Cardano to house his digital art was an easy decision, he told Forecast. Cardano is a blockchain with a good future, community, and ecosystem. While most top Cardano NFT projects remain engaged with their community, a few notable ones have been inactive on social media. According to Andy Leon, author of the book NFT From Zero to Euro, Cardano's forte is offering a user-friendly experience for NFT creators and traders. Leon said, "The platform offers low-cost transaction fees, making it an attractive option for enthusiasts seeking cost-effective and scalable solutions." Constacula, a pseudonymous Spacebots NFT holder, said that Cardano developers keep building despite the market conditions. In Discord message to Forecast, he said, "There was some more hype felt around the Cardano NFT scene when smart contracts were still to be announced, but it's an overall healthy NFT ecosystem. Will the Cardano blockchain turn its fate with NFTs?" we'll be keeping watch. Zoltan Vardai, Forecast.
Well, that's a wrap on this week's show, and thank you, as usual, for tuning in. I hoped you learned a lot, and it was always great to be here with you. Remember to like and subscribe to this video if you're watching us online. It's super helpful. Or stay tuned right here on this channel if you're watching from home. It's easy to stay connected with forecasts for the latest developments in the world of crypto and Web3. I'm Forecast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forecast IQ, get intelligent in Web3.
Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi. Emily Parker and Lawrence Lewitton have the day off today. Lucky them, but we still have a lot of news to get to. First, let's take a look at what's happening in the markets this morning, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is currently at 30,209. Remaining steady above that 30K line, but we might see a breakout. We're going to talk about that with our markets guest in just a moment. But let's see if Ether is following suit. The CoinDesk Ether price ETX is at 1,862, down just over 2%. And DeFi assets, the DFX CoinDesk's DeFi index is at 116.16, also down about 2%. Surprise, surprise. All right, let's talk about some big news this morning. At least 3 senior officials at Binance have departed the crypto exchange this week as the company prepares to defend itself on multiple fronts. This is according to a report by Fortune. Joining me now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning.
Happy Friday.
Too, yeah.
Thank you very much. It's not a happy Friday for Binance. The publication said Binance's general counsel, chief strategy officer, and SVP for compliance are among those who resigned. Bloomberg is reporting the chief business officer at the company also left. What's happening at Binance? Why are we seeing this exodus?
Yeah, so, multiple executives leaving at roughly the same time is never usually a good sign. Fortune is saying that these departures are in response to CZ and Binance's response to possible pending, U.S. Department of Justice action. It's been rumored for a while now that the DOJ has been investigating Binance, and, with the lawsuits from the SEC and the CFTC this year, it's very possible that the DOJ action, which will be, likely more serious just because of possible criminal penalties, is coming, much closer than either of those other investigations have been.
Now, CZ responded on Twitter last night. What did he have to say?
Well, obviously, he denied that it's a bad thing. Generally speaking, CZ has taken this tack where if there's any negative news about Binance, he downplays it as FUD. He basically took a very similar track in a very long tweet yesterday. I'm not going to read it out loud, but I think you have it on the screen there. Mm-hmm. He's saying that, this happens. Patrick Hillman likewise similarly put out a statement, also in a long-form tweet, saying that it was simply time and not, denying that it had anything to do with possible DOJ actions or, the company's business as it is.
Seems like an odd coincidence. But let's talk about the future for Binance. It's under investigation from multiple regulators around the world. What could happen next for the exchange? It's still the largest exchange internationally by trading volume. What do you expect to see happen for them?
I guess the big question is whether or not the U.S. DOJ will file a suit and bring charges. one of the rumors that is circulating right now, or one of the theories rather, is that the DOJ is holding off because, oftentimes it won't reveal charges. It'll file them under seal until they're able to arrest the subject that is named. That could be one of the things that's happening right now. So we don't know for sure if the DOJ has actually brought charges or not. That's just one of the options, possibilities. As far as Binance itself, we've talked earlier this week about it being searched by Australian regulators. We've talked in the past about French regulators taking a look at the company's business. Regulators around the world are clearly taking a much closer look at Binance right now, and it doesn't seem like this is going to settle down anytime soon.
All right, Nick, thanks for joining us this morning. I'm sure you'll be back next week with an update on what's happening in the Binance saga. It seems we get news every day on this. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. The June jobs report just out. 209,000 jobs were added last month, with the unemployment rate little changed at 3.6%. Joining us now to discuss the crypto markets is Fairlead Strategies founder and managing partner, Katie Stockton. Welcome to the show, Katie.
Thanks so much. Good morning.
Happy Friday. I just got to give everyone a happy Friday this morning. All right. Tell us about
Yes.
we took a look at the Bitcoin chart at the top of the show. We have another chart here that shows Bitcoin's support and resistance levels. We're going to get that up on the screen. And when we do, tell us what we're looking at.
Right. So with Bitcoin, we have seen an uptrend established, and yet there's still pretty good resistance overhead. If you see on the shaded area on the chart, there's a level that's just shy of 32,000. It's, I think, 31,850. It's a moving target. A breakout above that to us would really officially reverse the downtrend that preceded this up move that we've seen of late. So that would be another encouraging development from Bitcoin. We've obviously seen longer term momentum shift to some degree. It's falling short of being positive, but it's at least neutral and improved versus what we had gotten accustomed to for a while. So we're glad to now see the moving averages point higher. We would be seeing a breakout above that level as an actionable positive catalyst, not just for Bitcoin, but for the broader cryptocurrency markets, in that Bitcoin really kind of leads the charge higher when that tends to happen.
Yeah, I love saying the Fibonacci level. There's two levels here. We're talking about breaking past the 31.9K and then that 35.9K that you just mentioned. Tell us more about this secondary resistance.
It's just shy of 36,000 for Bitcoin. It's still a far cry from the levels we were talking about a couple of years ago. But if we do see a breakout, that is the next hurdle on the chart. And it is, as you mentioned, derived from the Fibonacci retracement levels. And they tend to be very relevant for currencies broadly. Anything that trades with very deep global liquidity tends to lend itself very well to the discipline of technical analysis. You'll see that the charts can be really reliable in terms of the levels, support and resistance levels, and also trending analysis. So we find that it's very valuable to derive these Fibonacci's. 36,000 would be targeted. It wouldn't mean necessarily that that's where the uptrend stops, but it would be a natural place for at least a pause.
All right. And now let's compare Bitcoin with Ether. What are you seeing weekly when we take a look at the two largest cryptos?
Overall, long-term, they're really range-bound versus one another. So Bitcoin versus Ether is a long-term trading range in that ratio. And yet within the trading range, we have seen intermediate-term momentum favor Bitcoin over Ether. And we see that typically during more risk-off environments. So it's a little bit surprising given that we have seen uptrends emerge for both cryptocurrencies. And yet we want to defer to what the market's telling us, which is that Bitcoin is, for now, poised to outperform within the context, at least, of that longer term range. We do tend to see cycles emerge shorter term where we'll have risk on for a couple of weeks and then it goes back to risk off. So there's always cyclical moves within that context to take advantage of. But for now, we would really sort of overweight Bitcoin in our positions if we were to have a portfolio.
And now another mention of Fibonacci. You point out how crypto exchange Coinbase broke out above the trend line resistance extending back to August of 2022. Explain that significance for us.
It's something that we're actually seeing a lot of, not even just in the cryptocurrency market, but in high growth stocks more broadly, where those that had downtrended for a year or two then went sideways for another year or so. That sideways action is now giving way to breakouts, which makes the sideways action look like a basing phase. And that's certainly the case for Coinbase. It has what we call an inverse head and shoulders formation. That's simply a description of how we've seen support and resistance levels play out. It did advance above the trendline resistance, which we call the neckline of that formation, and the next targeted resistance is around $88. So we are compelled by the basing phases. We wouldn't want an entire portfolio to look like those kind of turnarounds, but rather we would always prefer to see stocks that have established long-term uptrends, and yet we do think there's some opportunity here.
Katie, thank you very much for joining the show this morning.
Of course. Have a nice weekend.
You too. That was Fairleaf Strategies founder and managing partner, Katie Stockton. We're going to take a quick break. And when we come back, the race for a spot Bitcoin ETF, we speak to Bitwise Chief Investment Officer about their latest filing right after this.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
The race for a spot Bitcoin ETF in the U.S. is in full swing, with TradFi giants from BlackRock to Fidelity refiling their applications with the SEC. Joining us now to discuss is the Chief Investment Officer for Bitwise Asset Management, Matt Hogan. Welcome, Matt.
Thanks for having me, Jen. It's good to be here.
It's great to have you here. Now, Bitwise re-upped its spot Bitcoin ETF the day after BlackRock submitted a similar application. But in March, you told pensions and investments, that you didn't currently see a path forward for spot Bitcoin ETFs. What changed?
Yeah, I think a couple of things have changed. One, you've seen continued maturation in the general crypto market. So the CME strengthening its role as a significant market, and other maturation with more volume shifting onto responsible exchanges like Coinbase. And then secondly, just as a realpolitik thing, you have to listen when BlackRock comes to the market. They're the largest ETF issuer in the world. They're very careful. They're very connected. And I would be lying if I didn't say that that was an important signal as well. Bitwise has been committed to bringing a spot Bitcoin ETF to market for 4 or 5 years now. We're committed to being amongst the first pack. So those two factors are what changed the game. And we're now optimistic there is a pathway forward.
You mentioned BlackRock being very connected, obviously the largest asset manager in the world. There's been some speculation that maybe BlackRock knows something the rest of us don't. What do you think?
I don't think there's any behind the scenes smoke-filled room message passing. What I think is that BlackRock has extremely large resources and extremely well considered people who are focused on this, who have been working on this for a number of years. There's definitely talk in the industry of the discussions that BlackRock had, not with the government, but with other players in the space over the preceding months. So I don't think there is any backroom deal at all. I just think they've been evaluating this for years. They've been serious about this for years. Remember, they pulled Bitcoin into the Aladdin network a year or so ago. So they've understood that Bitcoin and crypto is an important space. They've been working on it. And I think they just figured the time was now. Maybe the Grayscale lawsuit played into that, but I don't think there was any special information passed.
Do you think the timing, you say the time is now, but we saw the SEC sue Binance and Coinbase days before BlackRock filed this. Why do you think the time is now? It feels very counterintuitive.
Yes, there's certainly issues in the crypto market, and I think we're all hoping for those issues to resolve. But importantly, those issues didn't focus on what's going on in the Bitcoin market. And I think in the eyes of the SEC, there's a major difference from Bitcoin. They've articulated this difference and the rest of the market. The other reason it's different now, which I mentioned earlier, but I want to anchor back to, is a big part of the ETF approval is the CME Bitcoin futures market being a regulated market of significant size. And if you think over the course of the last year, we've seen increasing volumes, increasing open interest. We've seen Bitcoin futures ETFs trade successfully on the market for nearly 2 years now, tracking that price with great fidelity. And I think those are real world examples of how the sort of institutional arm of crypto has leveled up and become more important, even as regulators are cracking down on the worst sort of excesses of the retail aspects of crypto. And I think the SEC is willing to separate those two and make an evaluation on the facts.
Now, the surveillance sharing piece of these ETFs have become a real talking point. The NYSE ARCA filing for Bitwise's proposed trust doesn't explicitly say whether it's entered into a surveillance sharing agreement with a crypto marketplace. Is that coming?
That's correct. Obviously, I can't speak to what's in the filing beyond what is specifically in there. I will say that I think the successful spot Bitcoin ETF application will need to include multiple pieces of analysis, including analysis focused on the CME market. Obviously, surveillance sharing agreements are an interesting idea. I think it's going to be a holistic approach, and that's certainly the approach that Bitwise is taking.
I think I know your answer to this question based on your last, but I got to ask, Coinbase is listed as the Bitcoin custodian for BlackRock's proposed ETF. Do you have a custodian?
Obviously, as you guessed, I can't speak to what's in the filing beyond what's in the filing itself.
All right. Report from JP Morgan came out this morning, and their analysts are saying that the ETF is not going to be a game changer for crypto markets here in the US. Of course, we've seen ETFs launched in different countries. What do you think an ETF would imply for crypto markets?
Yeah, I saw that report. I think the JP Morgan crypto analysts are exceptional analysts, but I think they may be missing the boat here. For one, I'd point out that the largest Canadian ETF has $600 million in AUM, and the US is 30x times the size of that market. So you could scale that up. That's a significant impact. But there's also a critical difference between the US ETF market and markets in Canada and in Europe, which is that in Canada and Europe, there is not the financial advisor marketplace dominating the ETF space the way it is in the US. In the US, one of the major user groups are financial advisors who control something like $20 trillion of wealth here. That doesn't exist in other markets. We think those are the first adopters of a spot Bitcoin ETF, and that is a gigantic pool of capital that right now has a hard time allocating to this space. And once there's a spot Bitcoin ETF, it will be push button easy. So I don't think there's a one-for-one comparison between Europe, Canada, and the US. They're just very different ETF markets. I do think a spot Bitcoin ETF is a game changer in the US. I think it's a phase shift. I think it's a sign we're entering the mainstream cycle of crypto, and we're really excited about the prospects of potentially bringing that forward.
And lastly, I have to get your reaction. We spoke about Coinbase being tapped for the surveillance sharing agreements. As we mentioned earlier in this interview, Coinbase is being sued by the SEC. What do you make of all of these asset managers tapping Coinbase for this?
Look, Coinbase is a fantastic publicly traded company with a decade-long track record of serving customers well. They're a regulated custodian. They are one of the custodians for Bitwise's other funds. So they're a fantastic partner. I'm not surprised at all to see the largest asset managers turning to them. They're one of the most trusted and trustworthy brands in crypto. And that extends beyond these lawsuits, which will take multiple years to play out, which in my view will likely be solved by new legislation and new clarity of legislation. But regardless, it doesn't change what's going on with Coinbase Custody, which is just one of the most trusted and trustworthy brands in the market. I think they will be a huge winner from the spot Bitcoin ETF race, however it shakes out.
All right, Matt, we're going to have to leave it there. Thanks so much for joining the show.
Thanks for having me.
Have a great weekend. That was Bitwise Asset Management Chief Investment Officer, Matt Hogan. All right, we're going to stay on the ETF beat. Joining us more with insights about the rush for a spot Bitcoin ETF in the U.S. is Ether Capital CEO Brian Mosoff. Welcome, Brian.
Thanks for having me here today.
Thanks for being here. All right. We are continuing this conversation about ETFs. You say you helped launch the world's first Bitcoin ETF alongside Purpose Investments 2 years ago in Canada and acted as an advisor to the Ontario Securities Commission. Talk to me about your initial thoughts on spot Bitcoin ETF filings in the US.
Well, I mean, everyone's wanted this for, I think, a very long time. The first filings go back about a decade ago when Cameron and Tyler of Gemini put forward their trust. And so it's not just a recent thing. We've seen many applications come before the SEC. And so this is good for retail investors. This is good for institutional investors. So far, the access points in the space have largely just been people who are technologists, internet savvy, willing to sign up on regulated or unregulated exchanges, whether they're based in the US or in another jurisdiction. And so bringing a clean access point to the US market for institutions and retail investors is a great thing. It's safer. It abstracts away things like custody. And so this is good. The question is just, when is it going to happen? And I think it is going to happen. It's just a question of when. Are we a few months away? Or are we another year? That's kind of anyone's guess.
What makes you say it is going to happen, given all the applications that have come before the SEC and been rejected?
I mean, the funny answer would just be, it has to. It has to, because it's clear that this asset class isn't going away. Whether we're in a bull market or a bear market, there's still interest in this space. The pendulum swings, in terms of price and market sentiment, but the assets aren't going away. Bitcoin didn't die in that kind of 2018 to 2019 era. There was renewed interest in the 2020 and 2021 cycle. And now we're seeing again, as regional banks start to fail, there's questions around what's happening in geopolitical events. People want access to this asset. And the question is, what is it going to be? Another advantage of greenlighting something like an ETF is this is good for people to report taxes, to know that it's being held, inside of their jurisdiction, not on some foreign platform. This is good for a lot of reasons that government should lean into. You can ensure that people are getting exposure to an asset class that they want, but in a regulated way, in a safe way, in something that has reporting obligations, that has the right type of surveillance to make sure that the way that the underlying asset is being transacted isn't being used in illicit activity or from some unknown source. When these ETFs purchase the underlying product, it's going to come from OTC desks, it's going to come from exchanges that follow certain rules, that have the right types of registrations. That's a great thing versus people going into a self-hosted wallet and on-chain trying to figure out how they're going to buy it, or again, going to an unregulated platform. So there's all the reasons to lean into this if you're a government or a policymaker. The question just is going to be, when is it going to happen? So I don't know exactly when, but I think it's time, and everyone wants this. And I think including the SEC, it's just about hammering out the last bit of details.
You know, our last guest said there is a big difference between the market in the US, Canada, and other jurisdictions when it comes to ETFs. Can you speak towards the adoption and reception of the ETF in Canada?
When we launched with purpose, the spot Bitcoin ETF was one of the biggest ETF launches in history. It had over $1 billion within its first month. That's Canadian dollars, so about 700 US. Currently, between the Bitcoin and Ether ETFs, there's well over $1.5 billion. There's other asset managers as well that have these products in market. So there are people looking to buy these exposure points. There will continue to be, and as he was saying, there's a much larger market in the US that is ripe for disruption, that's ripe for gaining exposure. And so I think this is a good thing. Canada is a fairly conservative market, so we haven't seen over the last year a lot of new money flow into the space. There's a lot of hesitation in a post-FTX world, but we're starting to see slowly the interest come back. We're starting to see institutional investors and advisors reach out and ask questions about what the next catalyst is going to be for the industry, how things are shaping up around Ethereum and proof of stake and the opportunity to stake. And then the next question will be, could you even build a staked Ethereum ETF? And that's, I guess, a topic for a different day. But we're excited to, in Canada, I think we're leading the way here. The Ontario Securities Commission has been working collaboratively with industry to figure out how the platforms should be registered, what would be appropriate to bring new ETF structures to market for different types of unique products. So the industry is maturing. These access points are coming to market, and I'm excited to be a part of that.
You know, given your experience with the Ontario Securities Exchange and what you're saying about the landscape in Canada, what's your take on exchanges like Binance and others opting to leave Canada because regulation is too tight? They're saying that they're not able to work with it.
Binance has done very well at bringing whatever the newest thing in crypto was to market first. Whether that was potentially a security or whatever the asset looked like, they wanted to make sure that they were giving their customers that exposure. And that's great for the customer, but it leaves a lot of gaps in terms of what the appropriateness is of those types of listings or products that they're offering to their customers. And so if you're in a market that says, okay, we have some rules set up, we have certain expectations that we're going to put on you and what you can offer customers, but some of the activities you're going to have to pause, you're going to have to not offer to retail investors, that doesn't quite fit into Binance's model. And I respect that. I understand why they would pull out and say, we're just not ready at this point to take on the level of registrations and reporting obligations. It doesn't mean I think that forever they'll never exist in the Canadian market, but for now, for their business, it doesn't make sense for them to be there. That's a great opportunity for the Canadian exchanges. You're seeing big US platforms like Coinbase do a pre-registration undertaking. It's what it's called currently in Canada. You're seeing them say, we're willing to play by the rules. We're going to do the registrations and we're going to work with the regulators to make sure that we're compliant in this jurisdiction. So that's an opportunity for these platforms that are in the US to lean into a jurisdiction that has started to create a path towards registration and to be compliant, and to say it's an important market. And to your points earlier, it's not the size of the US, but it's still, in terms of regulation, very similar to the US. The expectations are very similar. And so to go into that market and serve a customer base that looks very similar to an American one, that's a great thing. And they'll continue to expand a footprint into that area.
You know, you just brought up Coinbase there. Coinbase is listed as the surveillance sharing partner in many of the spot Bitcoin ETFs here in the US. We've been talking so much about surveillance sharing, but we've not really gotten into what this actually means. Can you take some time to unpack that for us?
I actually don't think that I'm the appropriate person to answer exactly what that means. I have just a very high level understanding of it, so I'll save that for another guest.
All right. That is fair then. Okay, let's just leave it there. Thanks for joining. Thanks for joining the show.
Thanks for having me.
That was Ether Capital CEO Brian Mossoff. Coming up, Horizon has scrapped its privacy coin label. We'll talk to the CEO about the decision after this short break. Good morning and welcome back to First Mover. Self-described layer zero blockchain Horizon is shedding its privacy coin moniker following global regulatory scrutiny. Joining us now to discuss is the co-founder and CEO of Horizon, Rob Viglione. Welcome to the show, Rob.
Thank you. Pleasure to be here.
Pleasure to have you here. Now, Horizon wrote in part on Twitter last week that Zen will no longer be considered a privacy coin after the deprecation of the main chain shielded pools. We are actively working with our exchange partners to keep Zen accessible for our global users. Tell us more about this move.
Well, it was an easy move for us in the sense that our community demanded it. So, and that's probably the interesting thing about this story is that these communities evolve over time. And for us, we've been focusing on a zero knowledge interoperability technology for the last several years. And our community composition moved away from, we're still very privacy oriented, but they were, tired of, or I would say, nervous of the regulatory environment. And just from a pragmatic perspective, Zen was having a hard time getting listings in a bunch of different markets, in particular our Korean market. So,
can you tell us a little bit more about the community's demands? What was the community saying? What were their concerns?
Yeah, so the demand was to remove privacy from the layer zero. The reality was our architecture has evolved over the years so that we're basically in interoperability protocol with like a network of blockchains connected with snarks. And having a privacy, coin anonymity at the L0 level just didn't make sense from a technical perspective. And then the reality was when we looked at the numbers of who was using it, we just didn't have that much demand within the community. We were talking about something like 0.4% of 1% of the Zen supply was actually actively using the shielding technology. So most of our users ended up not really caring about it from the coin anonymity perspective. They're more interested in privacy at the application layer.
You mentioned international regulation, maybe making the community members get some cold feet. Where is Horizon headquartered, and does that have something to do with wanting to move away from the privacy focus?
Yeah, so I'll just clarify. I'm the CEO of Horizon Labs, a U.S. technology company. So my company is based in the U.S. and also Europe, but the community itself is global, and we are actually in process of launching a global DAO just to really codify that. But when you look at our community composition, it's all over the place, especially Asia and the Korean market, like I mentioned. So as we make decisions, it's one of these consensus coordination problems of trying to satisfy a lot of different users from all over the world.
Now, you mentioned, using zero-knowledge proofs, looking at different technologies for kind of preserving some of the privacy. What kind of tech are you looking at moving forward that will benefit the community and address some of these concerns that they've outlined?
Yeah, so the first thing that we're doing pragmatically is we're launching an EVM, and that's imminent. So we're really getting into the core Web3 business, and then networking EVM and other chains together with zero-knowledge proofs. So our technology then from there is looking at integrating into other stacks that are out there. You can think maybe like other popular app chain markets is probably where we're going to be positioning the project going forward. So when you think about it from the strategic angle of what are we trying to do, it's not to replicate projects that already work really well, say like a Zcash at the privacy coin level, or like Ethereum at the application level. I mean, our value proposition is networking chains together using zero knowledge so that we could have massive horizontal scale.
Crypto exchange Huobi delisted several privacy coins back in September. Zen was included in that. Was this decision maybe made in part due to that and to prevent the coin from being delisted from other major exchanges?
Okay, it sure looks that way on the surface, but I will say though, the Zen IP, the Zen improvement proposal was written and socialized and voted on months in advance of that. So we're really in the execution mode of it. It just happened to coincide. Maybe we had such great foresight or dumb luck, but we'd already had that approved through the community beforehand.
What do you think the future for privacy coins looks like?
Oh, that's a really good one. I think they're necessary, and I'm a big believer in privacy. I think if we're going to transition like a non-trivial amount of economic activity on chain, you need privacy. You need privacy across any kind of application domain. You need privacy probably for value, and that's the privacy claim value proposition. I think these days, given regulatory uncertainty, a lot of people are nervous about where things are going, especially those that are in the U.S. and exchanges that want to, have U.S. customers. But I think it's going to be temporary, and that's just my crystal ball guess. Is I think years from now, if we look at this industry, privacy is going to be absolutely critical. Especially just look at demographics of who's adopting cryptocurrency. When you look at demographics sub 60 years old, crypto's here to stay. This is not really a question. And when you think that crypto's here to stay and it's going to be everywhere, you're going to need privacy. So I think privacy coins have an amazing future. I just think that it might be a bumpy road in the near term.
You said you're headquartered in the U.S. We've been talking about regulation for this entire show. What's your outlook for crypto regulation in the U.S. compared with other parts of the world?
Yeah, I think there's a famous Churchill quote about Americans always do the right thing after exhausting every other possibility. I think that's what's going to happen in the U.S. There's no way, in my mind, that one of the most innovative countries in the world is going to kill one of the most innovative industries in the world. I think this is a temporary thing. I think it's idiosyncratic to maybe some personalities involved, and I think it is going to take some legislative clarity, but I think that will come. Because when the U.S. looks at the strategic opportunity here for this industry and what it's going to do, I think whether it's leaders in the country realizing that they need crypto within the U.S. or whether it's just users demanding it, it's going to happen one way or another. I do view it as inevitable. And again, I do think that we have a bit of a bumpy road in the near term, but I think that's going to pass.
All right. And lastly, with Zen becoming more of a general digital asset, what's the use case you see moving forward?
Yeah, so it's an interoperability play with zero knowledge proofs. So think about our clustering with our EVM. We're going to release it with a variety of ZKP tools for developers. So we're going to be pushing hard for privacy-oriented applications. So privacy is not dead on Horizon. It's still one of the core value propositions. And then it's going to be integrating into other powerful ecosystems, and we'll have more news on that in the coming months.
All right, awesome. We're going to have to leave it there. Rob, thanks so much for joining the show.
Thanks for having me.
That was co-founder and CEO of Horizon, Rob Viglione. We should note that Horizon is backed by crypto hedge fund Grayscale's Horizon Trust. Grayscale and CoinDesk are both owned by the Digital Currency Group. That's it for First Mover today. I'm Jen Sanasi. First Mover returns Monday at 9 a.m. Eastern Time. In the meantime, you can catch the hash today at noon. I hope you all have a great weekend. You're watching CoinDesk TV. Good morning, good afternoon. You are watching The Hash on CoinDesk TV, and maybe you're listening to us on the CoinDesk Podcast Network. I'm Jen Sanasi, Wendy O, Will Foxley, and Sam Kessler are here with me today to break down the top crypto news stories, and we have some fun ones today. Who is taking it away first? Will, I think you got us with some Tom Brady news at the top of the show.
Yeah, I don't know what to call this. Like, is it a thought piece? Is it like a memoir? Is it like, I don't know, going back through the trash and kind of looking for some juicy nuggets? So we got a lot in this story from the New York Times talking about Tom Brady's relationship with flamed out and failed exchange FTX, which is currently going through Chapter 11 proceedings with its former CEO now going through alleged criminal fraud proceedings. This article basically details Tom Brady's time with FTX from the first inquiries of FTX to work with Tom Brady back in 2020 and 2021, all the way through the fateful days and the collapse of FTX back in November. A lot of great nuggets in the story if you're a fan of Tom Brady or just a fan of general intrigue. The most pressing, of course, that we have to get to is a revelation about Taylor Swift, which was incorporated at the very bottom of this piece. I think it should have been at the very top because it was new information.
I agree.
But essentially, it stated that, no, Taylor Swift did not end this deal with FTX and Sam Bankman-Fried. It was the other way around. SBF left the deal lurking in his inbox for over 3 weeks before he decided to not sign the $100 million sponsorship endorsement with Team Swiftie. So a little bit of change from the last story we had on this whole topic. Jen, any reactions there?
Well, first of all, I also thought Taylor Swift should have been at the top. Second, we didn't have FTX in Canada, and the Eras Tour has also not announced any Canadian dates. And so, like, am I really the person who should be speaking about this? I thought it was interesting that we have that class action lawsuit lawyer. His name escapes me right now. He was on the hash before, who said Taylor Swift was the only celebrity who actually did her due diligence, who actually looked into what was going on and said, maybe this is a security, and so I'm not going to enter into this deal. Now we have inside sources, as reported by the New York Times, who say, actually, Taylor's team signed that deal and it was left in Sam Bankman-Fried's inbox. I wonder if, this was the tipping point for him. He said, we've signed all of these sponsorship deals with all these huge celebrities. We've put our name on stadiums. And can we actually afford to give Taylor Swift $100 million? I would have loved to see the terms of that deal, to see how much of it was going to be in FTT tokens. The piece also talks about how Tom Brady and Gisele Bündchen were getting paid in tokens. And so just, a little walk down memory lane for me here. The interesting part, the interesting thing that I thought came out in this article was it's kind of like the underlying tone of this being like a bad industry and not just a bad player and bad product. They talked about how Tom Brady, launched his autograph platform, and now the platform is not seeing as many users. Revenue is down. They had to do layoffs. That is consistent across the space and also consistent across the tech space in general. And I wish that would have been pointed out, but I'm sure the New York Times has a lot of problems with what I say too. Wendy?
First off, I have to say, Shakira's breakup song was so much better than Taylor Swift's. I thought Taylor Swift's was absolutely terrible. Team Shakira all the way.
I'm
And
not
again,
here to pit women against each other. I love them both, Wendy. I'm just
sorry,
saying.
man. I'm sorry, man. I just gotta say
and Taylor Swift.
I prefer stuff in Spanish because it's so much more dramatic. It's got so much more soul. But anyways, I digress. This is a very interesting story. And of course, that key piece of information of Taylor Swift's team actually signing the deal is going to be at the bottom, because that would contradict everything that mainstream media has said. And mainstream media does not like to be wrong. And I feel like in the case with SBF, I know the criminal and the fraud and all of those different cases, because there's multiple of them, we're going to be seeing a lot more information be revealed. And I think that it's going to be very interesting to catch all of these things that mainstream media has been obviously hiding or suppressing. And we've seen that in this article. And again, when there is a bad actor in any industry, there's a bad actor. It doesn't make the industry bad. Well, except banking. We know that the banking industry is inherently bad all the way around. Shout out to JP Morgan and all of the slap on the wrist fines that they pay. Sam, did you have a take on this?
Yeah, I mean, a couple things. For one thing, I think there's been a lot of talk about celebrities no longer wanting to endorse crypto companies moving forward. And I think a lot of celebrities are going to stop, maybe the Tom Brady's of the world. And, we're probably not going to see Tom Hanks, who really cares about his brand, doing anything for, the future FTXs, whatever those are. Hopefully they don't exist. Or even something like a Coinbase, which is much more run of the mill. But I do think that we forget that the public and a lot of these celebrities and their teams have pretty short attention span, or pretty short, I guess, memories when it comes to the sorts of products that, people are willing to advertise. So, I mean, we were talking before the show basically about how the Kardashians are still, shilling all of these different supplements and stuff. And they're not the only ones who kind of don't really care about who they're associated with as long as the money is there. So I don't think that this entire industry of advertising for crypto is going to disappear in the future. But one other thing that is a completely unrelated thing that this brought to mind for me is just the fact that Terra, the very collapsed crypto stable coin thing from yesteryear, it feels like so long ago now, is still a sponsor for the Washington Nationals, because they signed a 5-year deal at, I think, like $40 million. And there's some behind the scenes drama there about like the Nationals not wanting to give that money back. But there is some irony around like we pick who we want to be angry at. So, Larry David is getting sued for advertising this thing that nobody knew really was a scam through and through when he was doing it. But also, we're not yelling at the Nationals for still calling their box the Terra box. Anyway, I just think that there's some irony there. But if I were a celebrity, I probably wouldn't, frankly, do what Tom Brady's doing.
You are a celebrity. You're on the hash.
Yeah, you're on the hash. We're talking about.
So you won't see me shilling any crypto companies.
Well, I think this is the thing. I feel like celebrities are going to come back. There's a bear market. We've seen these things happen time and time again. The celebrities are going to come back. People like money. Celebrities get a lot of endorsements, especially when we're talking about musicians. Musicians really don't get paid a lot, but they make a lot in endorsements and they make a lot in ads, and the same with influencers, and the same. It's just kind of how marketing is shifting. So I feel like we will see celebrities come back in, especially big celebrities. I do think that the industry will get more refined as time goes on, hopefully in the US. It depends who we get in as our next president. So, we just need some kind of simple guidelines, like force exchanges to set funds aside. We need to change the accredited investor law. We need to restructure the SEC. And if America could do that, we'll be okay. Unfortunately, it'll probably take about 10 years before we see any type of progress here, while Southeast Asia continues to flourish.
The celebrities haven't completely left, though. Like, if we just look at consensus alone, William Shatner was there shilling his NFT. I spoke to Dre from Cool and Dre, who said, like, the music industry is still completely on board with NFTs. That's what he said on the panel. And so I think the celebrities are still around. It's just what we're seeing is a result of the entire industry just being down. Although we're not that, we're doing a little bit better now.
So nobody's talking about the Taylor Swift deal was $100 million. Like, can you really be that mad for being angry when they?
Of course, we have to blame everybody else for our actions. We can't take full responsibility, even though we're supposed to be operating in a true decentralized economy. Come on now, guys.
Okay, Jen, take us away from this conversation. Take us away.
That's
No more
Will's input. Let's turn away to some more pressing news. BlackRock CEO Larry Fink says Bitcoin could, quote, revolutionize finance in an interview with Fox Business on Wednesday. Previously known as a skeptic, Fink's comments come after the iShares unit of BlackRock filed paperwork with the SEC for that spot Bitcoin ETF that we've been talking about. Feels like forever, but it's only been like a week and a half. Will, I'll toss it off to you. What do you make of Larry Fink's comments?
I kind of walked away with frustration on Twitter because basically this video was plastered everywhere. You couldn't scroll on the feed yesterday without seeing this video pop up. Now, to like the substance of it itself, really great stuff, and also really intriguing the fact that he was saying this. Of course, like you said, Jen, this comes after the FTX or after the ETF news that they are pushing forward with it, with the surveillance agreement with Coinbase. They've refiled, and they're in the running with all these other ETFs who have filed over the years. Now, his comments in the video were two parts, right? One part about crypto being an asset class, and the second about Bitcoin specifically being digital gold. Now, not to read into it too much, because a lot of times people in these positions who sort of have like a wider understanding of the financial space, but not necessarily crypto or Bitcoin in general, they kind of use the terms interchangeably. So it's hard to know really what he was saying there. Is he a Bitcoin bull and thinks of Bitcoin as gold? Or does he think of all crypto sort of having gold-like quantities about it? It's hard to know. I would assume it's probably the former. They think like Bitcoin has some gold-like tendencies, and all these other digital assets could have properties that are emergent and useful over time. And that leads me to my second thought, maybe conclusion from this is maybe this is not the only ETF they're going to put forward, right? Like it's not only going to be a Bitcoin ETF. Maybe there's an Ethereum ETF in the future. Maybe there's another token as well. Maybe there's a basket of tokens that incorporates things like a Coinbase or a Bitcoin miner and Bitcoin or Ethereum, stuff like that. So I think there's more on the horizon if you're seeing the head of this huge company going forward and promoting something like that. Wendy?
Do you really want my take? I feel like it's a little bit too early for my take, guys.
Okay, we'll get to Sam and then you.
All right, you know what? Okay, give it to Sam and then trying to catch my breath here. Okay, give it to Sam.
I mean, I'll make a quick take. I wrote down one of the quotes here about how he was talking about, when he was praising the virtues of blockchain technology, he talks about when you have a quote unquote pure blockchain. And then he's like, if you know who the buyers and sellers are, then, it's a positive thing for the financial ecosystem. So first off, I have no idea what a quote unquote pure blockchain is. I guess Bitcoin would be in some senses. I don't know if he knows what whatever. I don't know if he knows what he's talking about when it comes to any of that. So I do take some of it with a grain of salt. And he talks about if you know who the buyers and sellers are, that's kind of antithetical to the Bitcoin maxis, I would assume, when it comes to the privacy of this technology. We still don't know who Satoshi is, and I think that still is a core principle. So anyway, one thing that this reminded me of, without actually putting any opinion on it myself, is just the fact that I do think that there is, again, going back to ironies, this weird thing that we find in these bear markets where the same folks who are espousing the benefits of blockchain technology when it comes to getting rid of intermediaries, adding transparency, but also increasing privacy. Those folks are all very excited when institutions come in and kind of in this ham-fisted way talk about the technology and bringing it to more people. How does this actually democratize Bitcoin? I don't know, for it to be an ETF when you could easily just go on Coinbase and buy Bitcoin right now. Anyway, I don't know. I don't have full opinions. I just think it's kind of funny to see people excited about this thing.
When is it going to explode?
I'm so triggered right now. Oh, sorry. All right, let me just read the tweet that I put out because I'm so triggered.
That's what you wanted the time for.
I said, BlackRock is about to be accepted by the Bitcoin maxis. I thought the point was removing third-party predators and being your own bank. Self-custody will die. More importantly, I'm excited to get rich and ride the grift wave. I own Bitcoin. I've invested in Bitcoin. I'm excited because I'm going to make a lot of money. My whole thing is yes, Bitcoin is open source. It is for everybody. That's great. Fantastic. Fine. But the goal is to remove the banks, to remove traditional finance, remove these entities that create gaps between the rich and the poor. Bitcoin allows for anybody to participate, and that's what we're seeing now. And I personally believe with this BlackRock ETF or all of the other ETFs that are getting that will probably get integrated, it's going to continue to make people lazy in the United States and not want to actually self-custody their Bitcoin. You're giving your Bitcoin to like a fourth party to hold for you. Yes, that's okay for retirement. I get it. But at the same time, isn't this supposed to be digital gold? Isn't this supposed to be a hedge against the collapsing banking system and all of these other third-party predators? Like, to me, it doesn't make sense. But again, I'm more than happy to profit off of it and make a lot of money as more capital gets injected by the big boys. So that's my take on it.
I think this is a win for the space, honestly, Wendy. I agree with you. I think that's the goal, but it's not going to happen tomorrow, right? And if we juxtapose this story against that FTX story we just spoke about, here we have this huge traditional finance figurehead that's coming out and saying, actually, I changed my tune. Like, before I was a skeptic on this thing. Now I kind of believe in it for all of these reasons. And there's this ETF, which just gives another option to people. People can still hold their Bitcoin. They can still self-custody. Yes, maybe they're lazy and they're going to opt for something else, but maybe they'll get there eventually. I don't think this is going to change overnight. And I think when we talk about mainstream adoption, having someone who's been out in the public so adamantly against the space change their mind, especially when stories like that New York Times piece are coming out, I think it's a win. Will?
Yeah, we only got a few seconds here. So I will disagree with Wendy. I think that decentralization is a spectrum and that some people will be able to self-custody, which is the best option. Some people won't want to do that, and they're going to need an ETF product with their broker. And it's okay because everyone will have Bitcoin where they need it. Hopefully more people self-custody over time. But that option is there for the first time in human history, right? A lot of times we didn't have the ability to do that. So the fact that Bitcoin presents that option
Sam,
good.
are
you with Wendy?
Hold up, guys. We do actually have traditional finance folks that create custom SEPs, 401ks, IRAs with Bitcoin. I actually participate in one to help offset taxes, and that's the only reason why, so I pay less. But we already have those products available. So that's all I'm saying. Sam, sorry. Go ahead.
Oh, I wasn't going to say anything. Did somebody ask me something?
Yeah, I said, are you with Wendy? Because Will and I are respectfully on the other side of this argument.
I honestly don't really have a side on the argument. I feel like it's, look, the way I view it is it's always just funny to see us in these bear markets getting excited when the traditional people come in and spurning them at the top and then, welcoming them back at the bottom. It's just this cycle that we see. I sound very cynical.
Cough, Gary at the SEC.
All right, we're going to have to leave it there. We're going to leave all the cynicism there. Maybe when we come back, we'll just be on a whole different note. We're going to take a short break. Stick with us when we come back. Meta brings out the big guns and takes a swing at Twitter. That didn't really make sense. How do you take a swing with guns? But you'll find out what the story is after this break.
Welcome back to CoinDesk TV, The Hash. I'm Wendy O. We have Jen, Will, and Sam, and we got to talk about a very, very hot story here. Well, two of them actually. So Facebook parent Meta launches Twitter rival Threads, and Twitter also receives 3 state money transmitter licenses, and that is according to Decrypt, well, the Twitter news. So Meta launched its new Threads app. I actually joined, and I feel like because there's not a whole lot of people over there, there's better engagement, there's better interaction. However, I already have an impersonator that created an account that is trying to scam my followers. I'm going to actually critique this before I get into the Twitter, the Twitter money transmitter license. As a cringe fluencer shock jock that does this 24/7, 365, there's a lot of flaws here. The biggest flaw is you can connect it to your Instagram account, but you cannot import your followers over, which I think is absolutely ridiculous. Like, I feel like all of your followers should be able to be imported over. And I think what they should have done is done one app, because there's so many different apps out there and it just kind of makes it hard. So that's my critique on that. And I think that it's important to, talk about this stuff. Next, Twitter awarded 3 state money transmitter licenses in New Hampshire, Michigan, Missouri, approved it. And the platform will now be able to start expanding to its payments and other financial services. I know that I think you can use Stripe and PayPal for your subscribers and whatnot. I believe that I use that. But overall, it's interesting to see these guys compete, especially with their big fight happening soon. I want to kind of toss this over to Will, because I feel like this is be kind of a sports story at the same time. Is this a rivalry because of their fight they're having, or is it just two nerds that are trying to out-tech each other?
Where's the swipe? We need the swipe nerdy.
No, sports are not nerdy, and tech isn't nerdy. It's just funny to say that.
We do need the MMA fight between Elon and Zuck. No, like the new product is interesting. I was trying to get onto it this morning right before the hash. I guess you have to have an Instagram account, which I don't. So you got to make that first, and then you can log on. I think there's a lot of people coming for the Twitter throne right now because Elon has upended things so much. He tweeted last year that they were going to test in prod, which has a lot of similarities with the cryptocurrency industry, especially the DeFi industry, which notably does test in production quite often. And that can make the user experience pretty awful. Like I was alluding to earlier with the last story in the ETF and Larry Fink, that's all I could really see on Twitter yesterday, just because they've changed Twitter so much to where you just see a lot of the same content over and over again. People are feeding into the algo that way. I think Elon's sort of testing it. At the same time, you have someone like Mark Zuckerberg, who has a lot of dominant applications already built. They're not sitting on their laurels, right? They changed everything to Meta over 2 years ago at this point now, and they've started transitioning to a lot of different apps and trying to build them up. And I guess Threads is the next one, right? Which take on Twitter, which take on the organic microblogging that has been a successful company that has gone public. Let's make something new. We'll see if it takes off. A lot of these products do fail. And in cryptocurrency and in Bitcoin specifically, there's been a few, right? Nostr is a big one right now. But to your point, Wendy, the engagement's often pretty low engagement's high because not a lot of people are there. And so a lot of these products do die on the vine after a while, right? So that's kind of what I see happening here, but I'm definitely going to try it out, I suppose. Jen?
Really quick, sorry guys. Just so you guys know, I get like 2 to 3 emails per week about brand new social media platforms that they want me to migrate over to. And I tell them no every single time, because they're basically asking me to take my audience over there. This product, Threads, is a little bit different because it's already established by an established company. But again, these products generally die out and they don't do well, just from what I've seen over being a shock jock the last couple of years. Jen?
Yeah, I was speaking to someone who worked at Meta recently and asked what their perspective was on everything that was going on. And they said, like Mark Zuckerberg, it is obviously very smart, recognizes trends very quickly. He moves really quickly. And we saw that, when there was the threat with Snapchat, when there was the threat with TikTok, how Instagram was able to adapt to that and offer new features to get users to stay on Instagram for longer. Facebook is still the largest social media app in the world, followed by YouTube, and then I believe it's WhatsApp and Instagram. Facebook owns 3 of the products I just mentioned. And so if anyone is going to do it, I think it will be Facebook. But at the same time, I think they have, an uphill battle to actually get users off of Twitter, out of that environment, into a whole new environment to recreate that same culture. I think is going to be an uphill battle that I don't know if Facebook has really done that. They've just kind of acquired things and copied things. Sam, what do you think?
Yeah, I mean, before we transition to the next story, the only thing I'll say is that I think a lot of the talk has been in terms of winner takes all, and I don't think it's going to be a winner takes all sort of a thing. If Mark Zuckerberg makes his platform more of kind of a mindless sort of scrolling, interesting, fun experience, whereas Twitter, if it stays kind of in the more, well, I don't know. Twitter's also, it seems like, trying to move in that direction under Elon rather than the more social graph oriented, trying to, be on top of news type thing. We'll see what happens. I don't think it's winner takes all. They'll both kind of divide into their niches over time, or one will disappear. Who knows? But yeah, maybe to move on to this next story, which is a complete unrelated thing, back to crypto tech. Chainlink, this is a story I wrote. I think I published it yesterday. So Chainlink is this Oracle network. What they do is they bring blockchain, or they bring data from off of blockchains onto blockchains. And they do this through an ostensibly decentralized network of oracles. We wrote this story yesterday that's basically about how their proof of reserves product, which purports to bring proof of a crypto custodian's reserves from the real world, from these custodians, from companies, onto blockchains. We talked about how that Chainlink product, in keeping with the mold of how Chainlink is built, doesn't actually do anything to, it seems, bolster the credibility of those core proof of reserve claims. So proof of reserves was this big thing that's been around for a while, but became much, much more important with the collapse of FTX as stablecoin providers who back their tokens with real world assets, and exchanges like Coinbase and Binance had to prove to users that they had as much money in custody as they did, as they claim to have. But there's lots of different ways to prove your reserves, and none of them are as transparent as a actual blockchain would be. And Chainlink, despite its marketing, might not, improve upon that. But there's caveats, and we can get to those. Does anybody want to comment on this way different story? Will, let's go to
I'll
you.
Snag it. Yeah, the Chainlink story is interesting because it talks about like these things called oracles. Oracles are essentially price feeds, and they also have other types of oracles that allow you to look at reserves of assets. And oracles basically just report, right? They say this person here holds this thing in their wallet, and then they distribute that information to a lot of different projects. In DeFi, we see oracles used for price feeds in order to like have liquidations or lending protocols work correctly. And then when it comes to proof of reserves, we often see these oracles say, hey, this person has X amount of money in their wallet. You can use them. You can trust them. The issue with all this, and the issue with everything between cryptographic proofs in the real world, is that you have to have some sort of trust assumption there, right? We have to trust that someone is actually putting physical dollars in a bank vault somewhere, and that cryptographic proof can somehow read those dollars that are physical. And you can't really do that, right? Like you can't merge these two worlds. That's what makes Bitcoin so interesting, right? Is because the fact that Bitcoin is purely digital and it's purely cryptographic. You can always audit the reserves immediately just by running a node. A lot of these other platforms, these DeFi platforms, at the end of the day, they're using real world assets that you can't quite verify. Like at a certain point, you can't quite do it. And you can come up with schemes to make it better or more interesting or allude to being safer. But at the end of the day, it's like, I'm sorry, you can't get a computer to read this because it just doesn't work that way. Different worlds. Jen?
All right, we are going to leave it there. You can read Sam Kessler's story on Coindesk.com. Thank you for watching The Hash and for listening to us. I'm Jen Sanasi with Wendy O, Will Foxley, and Sam Kessler on the show. We'll be back again tomorrow. Same time, same place. We hope you all have a great afternoon. Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital. digital assets. I'm Jen Sanasi, along with my co-hosts, Emily Parker, CoinDesk's Executive Director of Global Content, and the Thai Director of Content, Lawrence Lewitton. Good morning, guys.
Morning.
All right, before we get into our show today, let's take a look at what's happening in the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 30,608, briefly creeping up above 31K, back down at the time being. Let's see if Ether is following the same trend. The CoinDesk Ether price ETX index is at 1,902, following directionally the same trend as Bitcoin and DeFi assets. The DFX CoinDesk's DeFi index is at 118. All right, let's get to our first guest. We're going off to Hong Kong. The jurisdiction is pushing to become a major Web3 hub, with the government recently establishing a task force for promoting Web3 development. Joining us now is Animoca Brands co-founder and executive chairman, Yat Su. Good morning, Yat.
Hello, how are you? Nice to be here. It's actually more like good evening here, but anyway, it's nice to be here.
It is our morning. It's your evening. We're just a global show. It's wonderful to have you. Now, you're among 15 people in that task force. Animoca Brands is headquartered in Hong Kong. Talk to us about what your role is going to be.
Well, I mean, it is what it says, right? The role is basically to help promote Web3 development in Hong Kong. And the role entails not just local development, but also to bring in overseas talent. I mean, there's already, thousands of individuals and companies that are now looking to apply for licenses or setting up shop in Hong Kong in areas of Web3 development. And I think the other thing that's fascinating is that this isn't just a government initiative. It's also trying to bring in private enterprise and bringing in basically companies like ours that know something about the space and driving the space. I think it also demonstrates Hong Kong's really goal to be the Web3 leader, not just actually in the region, but, in some ways, given some of the, I guess, less friendly actions happening in other parts of the world, I think there's an opportunity for Hong Kong, and that's what they see as well, to become a global leader, really, in the development of Web3, crypto, blockchain, and digital assets. And that's really part of our job, to basically, help make Hong Kong stay relevant and to continue develop basically, progressive frameworks as Hong Kong has done so far.
Given your experience, is there going to be a focus on bringing business from the gaming sector, the DAO sector, over to Hong Kong?
I mean, that's certainly one area that we're going to support, but it's basically everything. Web3 covers DeFi, covers, everything related to crypto, covers exchanges, and of course covers non-fungible tokens, gaming, also education, as we're doing most recently, and other forms of, basically culture as well. So it's the whole gamut.
So if you can, this particular task force, what do you think the long-term effects will have on mainland China? Do you think that this serves as a model or a potential a laboratory, if you will, for the mainland to change its policies? As you talked about regulatory crackdowns, if you will, on crypto in many countries, including the United States. But will this ultimately change the mainland's mind with how it deals with crypto?
Well, I mean, we just have to look at the lens of what's happened just a few weeks ago. In early June, Hong Kong announced basically that it allowed for retail trading for 16 cryptos that are out there. And just around the same week, Beijing came out and put out a Web3 strategy paper and specifically said that Web3 is the future of the next sort of iteration of the internet, and China has to lead in that area. So that's one. And then, of course, on national TV, as in CCTV, they were broadcasting about the development in Hong Kong and the fact that you can buy Bitcoin there. And this went across basically every Chinese sort of citizen in the national broadcaster. So you could say that maybe it's just a very interesting coincidence, or the other perspective is to say maybe this was not so much of a coincidence after all. Hong Kong has always been a sandbox for China when it comes particularly to financial services. And when you think of Hong Kong's role in the past, it's always been a gateway for the development of the financial services in and out of China, right? The FDI that goes from foreign investment into China often routes to Hong Kong and vice versa. It's, you don't have sort of free exchange of, for instance, foreign currencies in China, but you do have it in Hong Kong, which is basically, a renminbi clearinghouse, as an example. And so we expect the same thing to happen in digital assets and crypto as well. And of course, the other thing is that, for China, there is a wider theme around that, which is, given everything that's happening in the US, there's sort of two themes, and this isn't just for China, it includes places like Japan, Middle East, and even Europe in the same lens. One of them, of course, is dependency on the dollar. So really strengthening, crypto, one perspective is to say that it's sort of a broader attempt or a broader move for, sort of a form of de-dollarization. That's obviously one, agenda that sort of serves, various interests. And the second one is also to sort of really think about it, reduce the influence of predominantly American technologies, right? If you think about what's happening in the Web 2 space, the whole world, for the most part, with the exception of countries including China, is dependent on US-based technologies, whether it's Facebook, Amazon, Microsoft, Google, Apple, you name it. And that actually is something that is risky from an American, from a national sovereign perspective as well. So all of these sort of agenda items come together to try to, and there's a very strong reason why you want to develop and promote Web3, not just for Hong Kong and China, but also in Japan and in Korea and in the Middle East and Southeast Asia and many other countries.
Yeah, it's so great to see you. So I want to just dig in more to this Hong Kong question. So Hong Kong actually, in some ways, seems very similar to Japan in the sense that both are sending very welcoming messages to the crypto industry, in stark contrast to some countries that shall remain unmentioned, like the United States. But when you kind of scratch beneath the surface, and I don't say this is not a bad thing at all. This is not meant as a negative judgment, but both of those jurisdictions, Hong Kong and Japan, are not easy. In fact, I think they're going to be very, very difficult. And so I just want to talk to you a little bit about that, because I think with Hong Kong specifically, there's been a lot of fanfare about licensed exchanges, but there's very few exchanges licensed in Hong Kong. It's only a handful. I know it's quite early, but even, for example, opening up to retail traders, it sort of depends on how you frame it, because before there was already retail trade in Hong Kong, via OTC. Now it's more like they're saying, if you're not licensed to do retail, you can't do it, right? So it sort of depends on how you look at it. So I guess my question for you is practically speaking, how difficult is it to actually operate in Hong Kong? Because it strikes me as it will be a relatively challenging environment for exchanges, just because there's a lot of rules. Again, it's not a bad thing, but it seems like it might be more challenging than some people would expect, given how welcoming the rhetoric is.
Well, I guess, first of all, regulation is broadly a good thing, in the sense that once you actually put a regulatory framework, you give confidence to the consumer as well, right? I think one of the things that, one could make an assumption as to what's happening in some of these unnamed places, as you say, is the lack of regulation actually removes or sort of creates a kind of concern and doubt, and also basically doesn't give it any legitimacy. Because the moment you start to regulate it, you give it legitimacy, regardless of how strict the rules are, because you're basically acknowledging that this is an asset, that this is something that is, going to be here to stay, and you have to find a form of regulation. Now, I actually think the exchange, sort of the rules for the exchange, hash key, then there's, of course, there's a bunch of other basically exchanges that have already received it. And again, you have to remember, this stuff really sort of kicked off in really early November, effectively. And in that time, not only are there crypto ETFs, HKMA already issued a tokenized green bond. The monetary authority actually sent out a notice to banks, as you may have recalled, that said, hey, you got to start doing business with crypto companies, and you got to sort of be smart about it, as opposed to just simply saying no. I think it's probably the only regulator that has sent a message across multiple banks. HSBC, which is one of the world's largest banks, basically now started to allow the purchase of these crypto ETFs to their clients as well. So there's a lot of development that's happening throughout, and it's actually a very welcoming climate. And the main thing is that it's not just about the exchanges. That's only one component. And these are probably the ones that do require the most regulation, just because of everything that's happened. I don't think that's a bad thing. But it also invites all the other industries around it, because what's happening in other places where regulation isn't clear, it affects businesses who are making NFTs, for instance, who are doing blockchain gaming, who are doing sort of crypto art, for instance. These are not, by any stretch, should be considered as something risky or problematic. But in those places where there's no clear regulation, people are fearful. Whereas in Hong Kong, at least, you can say, oh, well, okay, fine. So they've made it very clear NFTs aren't going to be regulated, for instance, in the classic sense, and they're welcome to business, and they can just open up. And by the way, they can open up a bank account as well, which is another big thing, because in many crypto companies struggle to open bank accounts, frankly, anywhere in the world, just because of all the concerns that have been put out by some other places in the world that shall not be named.
Well, thank you. I think that was actually a very detailed summary, because I think sometimes it's hard to get a sense of what exactly is happening in Hong Kong. Okay, I want to just turn to a totally different topic, which is gaming, GameFi, Web3 gaming. I was at the event in Kyoto, IVS, bunch of Animoca people were there. It seems like like everybody in Asia is talking about gaming, right? And game, it seems like that's really a big topic. And I'm just curious, given that you're sort of in the center of that world, where do you see some of the hotspots for gaming in Asia? I'm hearing a lot of talk about Japan, hearing a lot of talk about Korea, obviously Southeast Asia. I'm just curious, what you're seeing. What are some of the interesting trends you're seeing in sort of the GameFi world?
I mean, those are some of the main trends that you mentioned. I mean, outside of crypto native companies like ourselves, you also have basically the big publishers and game developers in Japan and Korea. I mean, you've got Krafton, the creators behind PUBG. You've got Sega. You've got Square Enix, the creators behind, Final Fantasy and so on. These are major mainstream companies, all embracing Web3, thinking about digital property rights and non-fungible tokens. Many of them that we're working with as well, right? And in stark contrast to what's happening in places like the US, for instance, where game developers are, maybe secretly wanting to do it, but can't, just because there's a revolt either internally in the company or even within their customers. So it's quite a big contrast. Southeast Asia obviously is a big one as well. And then of course places like the Middle East. I mean, places like UAE and Saudi, for instance, are also very much embracing this trend. So I would say that what you should be expecting, and certainly that's our sort of forecast, is in the next 12 to 18 months, many of those games that have been in development for the last 2 years are going to be released. And a good game does take many years to produce. And these games are going to have all the high fidelity and the kind of graphics that, I guess the more sophisticated gamers are expecting. And so we think, in the next 12 to 18 months, we're going to see those games come out and sort of have a real impact, where people from, let's call it the Web2 gaming world, are just going to play these Web3 games because it's fun and entertaining, and then basically get sort of onboarded and introduced to everything that relates to sort of, I guess, GameFi and the lot.
Yeah, thank you very much for joining us this morning for us. Thanks for staying up for us. That was Animoca Brands Executive Chairman, Yat Su. Now, we are going to stay in Asia. In an interview with CoinDesk Japan, Circle co-founder and CEO Jeremy Allaire said the company is considering issuing a stablecoin in Japan under new rules. Emily, you've been following the story closely. Talk to us about the new legislation that came into effect on June 1st.
Sure. So CoinDesk Japan, our colleagues at CoinDesk Japan, interviewed Jeremy Allaire about Circle and some of their thoughts about the Japanese market. And basically, what Jeremy Allaire told them is that Circle is considering issuing a stablecoin in Japan. Now, on the surface, this might not seem like such a bold statement. Okay, he's considering it, he's looking at it, but it's actually very significant, because until recently that would have been impossible, and now it is possible because Japan, and I think a lot of people don't know this, stablecoins were essentially not allowed in Japan until very, very recently, and that's recently changed. Now, it's not going to be easy to do this. There's quite a process to go through, but Circle is one of the players that I think sees the market opportunity in Japan. Whether or not they're going to issue a stablecoin in Japan remains an open question. And there's a lot of hoops that they would have to jump through in order to do it. But I think the fact that we have such a major player now exploring the Japanese market really sort of signals the beginning of a new era in Japan, which is like the beginning of the stablecoin era, which has not been the case up until now.
Yeah. So how essentially do we know anything about how it would work? Or I assume this is a stable coin that's based on the yen, correct? I mean, they must think that there's some demand, or there will be a demand for it.
Well, I think, Jeremy Allaire obviously was, careful, and we don't know exactly what Circle's plans are, again, or if they're even going to do this. But I think now there is the possibility for both yen-based stablecoins and dollar-based stablecoins. Now, I think from the Japanese perspective, what I'm hearing is that there is some interest in having a yen-based stablecoin, because that's just something that could potentially just increase the usage of JPY. So I think just from a policy perspective, I think there's definitely interest in that, and just sort of, creating sort of like easier transactions, in sort of the blockchain crypto world via JPY stablecoin. So I think that is part of the goals for Japan here in doing this. I mean, it's really notable here that at a time when, the US, for example, I mean, there's been so many stablecoin bills, right? We're always talking about them on the show, and we have yet to see one become a reality. And, it's interesting that Japan would sort of choose now to kind of open up to stablecoins. In fact, they're one of the first countries to do so, clearly because they see some sort of opportunity here, rather than risk. However, it's worth saying that this is going to be a very, very strict sort of regime. Like, for example, say you have a stable coin, Japan is requiring that like the money that backs that stable coin is basically kept in Japan, right? So they want, total one-to-one redemption. So I think it's fair to say that there are some stable coins which will remain nameless, major stable coins out there that probably will not make it into the Japanese market, because I don't think they would agree to such terms. And
One
there's
that-
only certain type. Yeah, I mean, you can name
one
them.
that rhymes with feather.
but but there are other rules in terms of like only certain types of institutions can issue stablecoins. So again, not going to be easy. This is generally the case with Japanese crypto regulation. Is that they're very forward thinking, they're very welcoming, but they're very tough. So I think that's really the question is how this is going to play out and what kind of players will make it into the Japanese market. But I do think Circle's statement is definitely significant.
Zooming out, Emily, this sounds very similar to what we were just talking about with Yat in regards to Hong Kong being very welcoming to Web3, but also having quite strict regulation. Can you tell us about the broader Web3 perspective in Japan outside of stablecoins? What's happening there?
Yeah, I think Hong Kong and Tokyo are quite similar in a lot of ways because both of them, and again, it's so different from the US. I mean, when you come to Tokyo, and you see, so I was, at a crypto conference in Kyoto. There were, I don't know, the organizer said there was something like 9,000 people there, mostly from Asia. I mean, it's really a lot of energy and optimism, a very different vibe from the US. And, you have the Japanese government, you had the Japanese prime minister actually give an opening address at this crypto conference. He didn't really talk about crypto, but still, can you imagine President Biden giving an opening address at a crypto conference? I find it slightly hard to imagine, right? So just on the symbolic level, Japan is kind of all in, right? I mean, they're just really, promoting Web3 and welcoming Web3. I guess the other side of it is that it is strict. And I think, for example, the stablecoin rules are strict. There are other areas where it's very strict. I think it's difficult to operate an exchange in Japan. Coinbase didn't make it. Kraken didn't make it. They both left the Japanese market. There are various reasons for that, but I think, it's generally known that this is difficult. I think there are also some tax obstacles that remain. Japan recently did relax this one very onerous tax restriction on unrealized gains, but you do still hear a lot of complaints about high taxes for crypto. So it's not exactly the easiest place to do crypto, but like Hong Kong, it's clear and it's welcoming. And I think we will see more crypto businesses kind of looking to Japan and Hong Kong in the future.
How will this affect CBDCs in Japan?
It's a really interesting question. I mean, there's definitely talk of a digital yen, but it's not the same kind of animated. Animated is a very euphemistic term, debate that we see in the United States, right? You don't hear, presidential candidates saying that, this is going to be a surveillance mechanism. I mean, you're not really.
They don't have Florida in Japan. That's the problem.
Yeah, exactly. There's not a Japanese version of, DeSantis
Florida.
saying that this is a surveillance instrument. So I don't get the sense right now that there's the same kind of divide between, CBDCs versus stablecoins and the two of them, can't exist. I mean, I think if the Japanese government thought that, then they, I don't think the road for stablecoins would be as open as it is now. But I think that remains to be seen. I mean, I think it's unclear exactly what is going to happen with the digital yen, but I don't get the sense that they are in this sort of stark competition in the way that many frame it in the United States.
Emily, thank you for that. It's always a pleasure zooming out and getting the global perspective on this industry with you. We are going to take a break, and when we come back, we'll be taking a look at the markets as Bitcoin briefly tops $31,000. We'll see you after these short minutes.
Well, just very briefly today, we had Bitcoin trading at $31,000. I mean, who would have thunk it a year ago? Maybe a little bit less than a year ago. Who would have thunk it back in January? And that is because we've had some incredible gains this past month, and really this entire year. So joining us now to discuss the crypto markets is CoinDesk Indices Head of Research, Todd Groth. Welcome, Todd.
Good to be here. Welcome.
Glad to see you. So, Bitcoin up 20% in the past 30 days. But what's happened in the past quarter? Meaning, April, May, June.
So looking back here, first off, we started the quarter strong with consensus, the conference in Austin, and then from there we've been in a bit of a range. And we've tested the high end of the range, the low end of the range. May in some sense was fairly muted, coming back from a good April, and that was all. This has also been on the back of SVB in March. So with May, what we had was that there was sort of treading water in the markets, range bound again, and part of that was crypto being exposed to macro headwinds of the repricing of interest rate cuts, or pricing in no cuts for the end of this year. In March, we had 3 cuts priced in. Then it took a range-bound May, to basically take those cuts out of expectations, so that there was no dovish view towards the end of the year. And over that time, we had a lot more on-chain activity with meme tokens, Pepe specifically. Just in a few days, going up to 1.5 billion market cap. Now it's around half that. So that was sort of April, May. And then June, we've had a sort of two primary events that have resulted in. First off, we had the Binance and Coinbase SEC announcements. That really put a damper on all the medium to small cap alternative tokens. There's they're still down relative to Ethereum or Bitcoin. So you have that combined with then BlackRock filing for the Bitcoin spot ETF, which was obviously very Bitcoin positive. That's resulted in a pretty big bifurcation in this market. I know we sort of had that before with the futures, CFTC considering both Bitcoin and Ethereum to be commodities, everything else is security. That continues to play out, and so with that, we're seeing Bitcoin dominance back above 50%.
Let's dig in a little bit on the issue of the sectors, right? So DAX, the digital asset classification standards that CoinDesk has put together. It divides the market into several sectors. What about those sectors? And you talk about this bifurcation. Mm-hmm. What does that mean going forward? Or what did we learn in the recent past that could tell us of why and where we are today?
So we're seeing that bifurcation sort of play out even within the sectors, because both currency and smart contract platform, they contain Bitcoin and Ether tokens within them, respectively. And those have been relative outperformers, especially compared to digitization, culture and entertainment, computer sectors. Computing sector, those had some of the names listed in the SEC enforcement action of Coinbase offering unregistered securities. So that's really sort of split the market into those different themes of those that are regulated, i.e. Bitcoin and Ether under commodities law, versus everything else effectively. So we have continued to see that, and I guess in summary, Q2 of this year was very, very much more of a relative value market as opposed to Q1, where Q1 we had a big reversal, sort of a January effect plus in the broad market, which had a significant bounce versus 2022.
Tell us a bit more about what the Bitcoin Ether trend indicators are showing us for the rest of this year.
So currently they're both registering strong positive trends upward. So that's been a good indication. And actually, when you look back at the trend indicator readings in April and May, mentioned sort of range-bound markets, that was reflected in the indicator. So what's nice about the indicator is it's a way to kind of filter out the day-to-day noise as we're trading through this range. We're currently on the higher end of the range, but the range generally does have a positive slope to the upside. And that's been shown in the both trend indicators. For June, we primarily had Bitcoin as a positive trend, whereas as Ether was a mildly, initially a neutral indication to a slightly positive. Now that's full positive. So both of them currently are pointing to strong positive trends in the market. So we have the Bitcoin trend indicators. Also thinking about more macro indicators. We have sort of two offsetting effects currently. So we're starting to see rates rise again, both real yields and nominal yields. This morning, actually, the 2-year U.S. 2-year was about 5%, the 10-year about 4%, which are on the upper end of the range. That's been a bit risk negative in the market, and we've actually seen that this morning with Bitcoin selling off a bit from last night's rise higher. But that's offset with credit spreads that are still tightening, which is risk positive. So those sort of offset each other. The bigger elephant in the room is the inverted yield curve. We've been inverted since last July. That's generally a 6 to 18 month out indicator. It's the most inverted since the early 80s, and it continues to invert. So that is
going to happen any day now.
Exactly. Any day. We've got a clock over our heads in this market. So it's a matter of when it strikes. When does the yield curve strike? It's been a leading indicator for all but one recession since the 1950s, I believe. So TBD on that. It'll be interesting to see where we go with that. And part of that will have to be the monetary response going into that recession as to where crypto goes from there.
Todd, thank you very much for joining us this morning.
Thanks for having me.
That was CoinDesk Indices Head of Research, Todd Groth. Coming up, Latin American crypto services provider Ripio has been approved to operate in Spain. We speak to the CEO after this short break. Good morning and welcome back to First Mover. Latin American crypto services provider Ripio gets the green light to operate in Spain as an exchange. It's the latest in a number of licenses to crypto companies granted by the country's central bank. Joining us now to discuss is Ripio founder and CEO Sebastian Serrano. Welcome, Sebastian.
Well, thank you. Thank you for having me. Good morning.
Good morning. Tell us about your plans for Spain. What do you plan to do with this approval?
So it's been a lot of work. We well, as a company, we started 10 years ago from Argentina. And then over the years, we grew to Brazil, to almost every other major country across Latin America. And this year, we first got a license in Florida, which is outside of Latin America. And now, after almost two years of working, we got this approval for our license in Spain, and we decided to open the operations in the country because it has a lot of connections and flows with Latin America, and it's still a Latin country, but not in the continent, and it's the first time that we cross outside of it. And we think that we're gonna have a lot of opportunities for people that buy and sell stables and crypto, and need to send money into Latin America. Countries. We also always had interest from Spain. We create a lot of content in Spanish. And that brings us always traffic to us. From Spain, and we also over the recent years we have been doing a lot more focus on B2B and corporate deals. So we also are planning to offer our B2B services and custody for European companies.
Now, Ripio was founded in Argentina and also operates in Brazil, Mexico, and the US. Talk to us about the regulatory challenges you're facing right now. Those are a lot of different jurisdictions with a lot of different regulation. How are you managing? Where is it easy? Where is it challenging? Break down for us.
So, every country has its challenges and its views. And its own context. For example, in Argentina, there is a lot of concerns about the exchange rate in the country for dollars, and there's a lot that we work with the regulator about the impact that has crypto in the exchange market, and there's a lot of that we that discuss. We recently did a conference in Argentina, our first conference, and we got the president of the president of the CNB, which is kind of like the SEC for Argentina, and the people from the Central Bank of Uruguay, and other regulators. And this is part of like a lot of work that we do in every country that we have a presence. Many of the countries in Latin America are starting to have regulations, and we participate a lot in that discussions. For example, early last year, Paraguay has now a law for crypto, and because of how the context of the country is, it has a a lot of focus on mining, because it's a country that has a lot of mining in Bitcoin. And that's what you see in every country. Every country has like different concerns about like or its remittances, or so in every country we're seeing different concerns that we need to work on. But the thing that I think is common is there is coming regulation in almost every country. There is a law coming up in Uruguay that is in Congress. There is a new law that passed in Brazil that the central bank needs to regulate now, and you see that almost every country now is getting some sort of regulation. Each one of them has its own particularities and concerns, but this I think like in the next 2 years we're gonna see like almost laws in every Latin American country regulating crypto.
Sebastian, let's just quickly talk about the market for a moment. Now, this is not unique to Latin America. There's obviously a lot of market challenges around the world. But, I get the sense that, for a while, there were so many headlines and so much media about the Latin America crypto boom. Seems like it's cooled a little bit. Again, I think that's happening all over the world, not just Latin America. But I'm just curious, like from an exchange perspective, how you see that, and are you seeing that? Are you seeing some of the activity and volumes? I'm just not hearing the same kind of excitement that we heard maybe a year or two ago. And again, that's true kind of everywhere. But I'm just curious, how you see it from where you're sitting.
So it's the same across Latin America. There is a less news coverage or less excitement. I think the price of assets have a lot to do with that. But the thing that we have been seeing a lot across Latin America is that especially the use of stablecoins has been growing and growing, and that is something that is becoming more common, and there is a lot of economic flows that happen and a lot of transactioning. So crypto comes back, appears more in broader context, and it's more and more normalized as part of life, especially in Argentina, which is the levels of adoption are very high. And then for example, to give an example, there is an election now in Argentina, and there is a popular podcast that like 3 major candidates went to talk about blockchain, crypto, and technology, and these are things that need to be covered. Like these are things that are part of the daily lives of people. So while there is like less excitement, and I think that will change when there is more price activity. What I do see is there is a lot more common use of this technology, and not just speculation.
Thank you very much. We're going to have to leave it there. Thank you so much for joining the show.
Thank you. Thank you for having me.
That was Ripio founder and CEO, Sebastian Serrano.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
FTX said an illegal filing that BlockFi's bankruptcy proposals are an abuse of bankruptcy rules. with $1 billion of disputed transactions at stake. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk State of Crypto newsletter. For the love of God, you need to subscribe to this thing. Good morning, Nick.
Good morning.
Okay, so FTX, they built out BlockFi last year back when we thought FTX was the white knight that would save crypto. Oops. Anyway, what's going on now with BlockFi's proposal, and how are these two connected still?
Yeah, so a few months ago, BlockFi put out a proposal for really trying to settle out how some of its claims could be organized, or some of the debts that it owes other parties could be organized, and trying to set up a voting schedule for the different types of creditors. Right. This morning, yesterday, FTX filed an objection saying that under that proposed BlockFi schedule, the funds that BlockFi owes FTX might not be properly repaid. Basically, to your point at the beginning, where FTX is alleging this is an abuse of the bankruptcy system, FTX appears to be alleging that BlockFi is seeking to get out of that particular, those particular debts by, through its filing through the bankruptcy process.
And we see in our favorite comic villains for crypto, 3AC and SEC, they're objecting to this. What's going on? Why are they so upset, the two of them?
Yeah, so 3AC's got a similar concern. It says that BlockFi owes it more than 200 million, 220 million, and it's concerned that it might not be able to object to certain fraud allegations or issues like that. The SEC's concerns are a little different. It's more focused on some of the language of the actual proposals, and it's similar to what we've seen with the SEC's opposition to, for example, Voyager's Chapter 11 bankruptcy process. That's more procedural. It's more focused on making sure that, in the SEC's view, that the appropriate individuals and parties are, given the level of responsibility that they should have, meaning, they want to be able to, investigate management. They want to make sure that management is not released from any, certain liability claims or anything like that. So three different objections really, but following similar threads of what we've seen before.
Nick, thanks very much for joining us this morning. We will see you tomorrow.
I will.
That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on Coindesk.com. That's it for First Mover today. Thank you to my co-hosts Emily Parker and Lawrence Lewton. We'll be back same time, same place tomorrow. You're watching CoinDesk TV. Good morning, good afternoon, happy hump day. Welcome to the Hash on CoinDesk TV. You may be listening to us on the CoinDesk Podcast Network if you're not watching us, but either way, we love you, and we're happy that you're here with us today. I'm Jen Sadazzi. Joining me today is Wendy O and Will Foxley. We're going to get right into the news of the day. Will, you got our first story. Some new developments with those ETFs.
Yep, $3 Wednesday. I'm in a weird box today, though, so anyone watching this, apologies for that. It's an odd angle, but we're here. That's all that matters. Valkyrie Digital Assets has refiled its application for spot Bitcoin exchange. Traded fund. Of course, they already have a futures Bitcoin exchange traded fund on the NASDAQ. So this follows up on top of that. That one, they've refiled using the Coinbase surveillance agreement. that was first noted or at least whispered with BlackRock. The SEC went back to all these people who had filed ETFs and said, we need you to name whoever is in the surveillance agreement. So now all those refilings have begun, with Valkyrie being one of those. Of course, the market is turning on. On a lot of this news, Bitcoin peaked over $31,000 over the weekend, and it's been pretty strong on headwaves that hey, there might be a spot ETF in the future for Bitcoin. Wendy, I'll throw it over to you for your take.
I feel like BlackRock was playing 4D chess. With the entire market, because wasn't BlackRock the first one to kind of kick this trend off when it came to filing for Bitcoin spot ETFs, and they, breaking news was that the BlackRock Bitcoin spot ETF was rejected when in fact it wasn't rejected. It just needed to be modified, but I feel like they purposely left that it just needed to be modified. But I feel like they purposely left that area blank for the SSA, for their central intermediary, and they kind of needed to wait for somebody to clap back, and then everybody else kind of followed. Suit. So I think it's very interesting that they named Coinbase, considering that Coinbase is currently going head to head with the SEC. And again, at the end of the day, I'm not a big fan of a Bitcoin ETF because I feel like it's going to continue to make Americans more lazy. And we're not going to safely custody or even need to learn how to safely custody our Bitcoin. That's another argument. But at the same time, I also think that it's very interesting that they picked Coinbase, considering all of the drama that's happening. And I'm really all of the drama that's happening. And I'm really here for the tea. This is probably the best novella I have ever seen recently.
It kind of is a novella, Wendy. So Coinbase being named in this, I think, was a surprise to everyone. Given that the SEC came after Coinbase in their lawsuit, but they're being named as the surveillance sharing partner in, I believe, all of the ETFs that refiled, right? So BlackRock refiled. Listing Coinbase as the partner. A few others followed suit. listing Coinbase as the partner. A few others followed suit. I believe almost all of those on that graphic that we see on the screen there. But according to BlackRock's filing that came in just a few ago, Coinbase has represented 56% of the dollar to Bitcoin trading on US-based platforms, and that's why BlackRock Bitcoin trading on US-based platforms, and that's why BlackRock